Levy Romain. Levy is a manager at KPMG Advisory Service Limited, its deals advisory department. He has over 15 years of experience in financial services sector with the following skill set summary. Risk management, internal control reviews, including review of IT systems. In financial services, he deals with banking, insurance, and asset management. He's also in the market entry and feasibility studies for new entrants in a particular industry. He deals with financial modeling and valuation, and also create knowledge on similar transactions, like price multiples. Project management in different departments and country staff, financial and operational due diligence, and private equity and strategic investors, for instance, assistance in identifying targets and pipeline, bid preparation, and reviewing SPAs. He deals with capital raising and potential investor search for clients. He conducts independent business reviews for non-performing loans and ongoing monitoring. He also pre-disbursement reviews to ascertain viability of financial projections or business models. Levy has vast experience in multiple countries, including Bermuda, Rwanda, Tanzania, and Malawi, and carries with him a diverse perspective on each of these subject matters. Could we please welcome Levy for the next presentation?
As he walks in, the password for the Wi-Fi is hotel in capital letters 2017.
Okay, morning everyone. So I've had interesting conversations in this forum, and I think what I'm here to talk about is basically, as the heading says, creating risk control global portfolios, taking into account multiple risk variables. But when I thought of how to present this presentation, I looked at it this way. We are coming here as, trustees and, people who have been given a fiduciary responsibility to manage funds on behalf of various members. But the first thing that I had when I had a conversation with someone about this, he told me, look, do we really understand the people who we invest the funds for? As in, do we understand our members? And two things, there's the second thing I was being told to talk about, basically as an idea, is do we really understand what we are seeking to invest in? So basically my presentation will be along that line. Do we really understand who the members are? In terms of selecting our portfolio, we're pretty good at that. In terms of monitoring, we are not very good. We've talked about private equity. We've talked about it yesterday, today. Do you understand something called a J-curve? Michael talked about something about being long-term and illiquid. But we also understand that sometimes it does not make money, sometimes you make money. People really understand that or any other new investment. So basically, and then the other thing that I talked about is the last one there. There's this been new derived by the government to think about pension schemes as a source of funding for the big four projects. If we are to take that on board, what do we need to look out for? So basically my presentation is around that line. So if I could start, so that's what I was talking about. Do we have understanding of our members? What are their profiles? How their risk expectations are? Because what I've come to realize a lot is if we understand who we are managing funds on behalf of, then we can guide ourselves in terms of how to invest. The other thing that I thought about, and I think this is something that I've seen a lot in the West, in other parts of the world other than just Kenya. Sometimes pension fund members are actually investing their own money, not trustees, not investment managers that are supposed to be appointed by the trustees. People actually invest in that. Do you think that will ever happen in this market? The other thing is I've talked about is now, if you look at the way investments, I mean, that was the previous slide was talking about we are very traditional. We've invested a lot in fixed income, uh, governments, especially bank deposits. That's where I was coming from here. There's been a lot of banks going under in the market, and those banks have taken a big portion of funds for the trustees. Do you think we would have assessed that or figured about that? The other thing is we also talked about is assess. We are very much return driven. The question now is, have we stepped back and also said, what's the quality of the risk returns? If you see the market and if you do like individual pension schemes, people always look for how much return you earn for this company versus this company, and they always move where there's always high money. The question is that good or that bad? And the other thing I was talking about is real estate. So that's my thinking process. And the crux of my conversation is basically understanding the pension scheme members. The reason why I talked about this is because what we're dealing with right now in the market is a lot of who we are calling millennials, people who are, 25 to 23, 25, lower than 30 years. They have a very different way of doing things and how they look at life. That's why I call it eat life with a big spoon. So things like what are they caring about, accessories that they have. They don't care so much about investments. You give them money now, they don't care about how much they invest, where to invest. The last thing I was talking about there, initial cash offering. By way of hands, do you know what that is? No. Do you know what Bitcoin is? Right? A lot of young people, and actually I've seen this a lot of young people have invested in such investments. And actually, if you look at their phones, they track how much the performance is. So their mindset is quite different. If they care about lifestyle, if they're going to do investments, mainly high risk investments, right? So does that mean that they're interested in shares that we tend to, quoted shares? Probably not. They also have a very interest in social awareness. They're very cautious about companies that are going green, things like, companies that are going green, things like pollution is not something that they're looking at. So they have a different mindset. That's something you need to bear in mind. Now, as they progress in life, they start thinking about families settling down. They realize, look, we've been living life in a good way. We haven't saved as much as we can, but now they would like to start starting to invest. The other thing that they're trying to look out for is they would like to manage, imagine, to have a buffer. So if you have a family, you need to have money to, for taking care of emergencies. Changing jobs, which is affects a lot of our trustees, because you see, when they move from changing jobs, they have to take their money from one scheme, company scheme, to another scheme. And then the other thing is they're probably thinking of a business. Now, if you start to understand these kind of things, you now start to look at it like, what should we be investing on their behalf? Okay. The other one was, yeah. So the things I was asking about that is, look, they're realizing they haven't made a lot of money. The question is, should we give big exposure to real estate? They'll probably say no. Would they be considering things like private equity and shares? Probably that's something that we need to think about. And then the question is, how can we mitigate from them transferring one fund to another? So you see, things are starting to change in terms of the members, in terms of what they're looking for. So this is what we thought we'd bring out in terms of what are we looking at. Just a second, the slides don't seem to be. Someone from IT, there's something. Yeah, this are meant to be. There's a slide behind this one here. Yeah. Sorry about that. Sorry. Right. Yeah, I think that should be, yeah, that should be it. Yeah. Okay. This one is going down. This one is going up. Okay, sorry about that. So remember what you were talking earlier. So people are realizing that we haven't been investing as much as they can. We have commitments that we need to take care of. Now they're starting to do something about it. Now, this is what the situation is changing for them, for individuals. People who are maybe in their 30s and 40s. Things are lifestyle costs of going up. No, there's still a problem. They still basically. I'll try to see if I can talk without the slides, but there's still greater needs that they have. Right. Okay, sorry. I'll just, if I can talk without the slides, I'll see if I can do that. Yeah. So as we start moving on, the question is, you know, I'll just jump because what we try to say is as we move on various life stages, you start to realize people have different interests that are looking at. So here, this is a slide I was trying to talk about is remember as you start incurring all these obligations and all these expenses, now you start to see people are making decisions on their own. What we're trying to put across in these slides is a number of things. People have different needs. People have different needs depending on their life. If we don't understand who the members are and what their interests are, then we might not be making sense. So I've had comments, people say, for instance, that we've been a very traditional market. Now, if I look at this other side, that I have all these obligations that I need to take care of, would I want someone else to invest in risky investments and lose that pension money? Because you see, what you're looking at here is if I lose that pension money, I don't have something else to take care of. So the key thing that I'm trying to bring out is, do we really understand the members in terms of what we are looking for? And the question is, based on that, do we think that we are designing the investments or designing decisions on investing in areas that are appropriate? So that's basically what we're trying to say in the first section. In case there's someone who has a question, just let me know. I'll be glad to pick that up. The other thing I wanted to talk about as well is, and that's basically the third bullet there. Now, in this market, what I've seen a lot is there's been a lot of focus on things like guarantee funds, where you are promised a certain return of money. You've been seeing a lot of focus also in areas like banks where people put a lot of money. The question that I have for you is, if for instance the three banks that went under, which went bank with a lot of money, do you think people would have understood that? And that's where we're coming from as trustees. Did we sit back and say, let's question what the investments managers are doing, or let's question what's going on in terms of in the sector, and then make a decision based on that? So that's something that we need to see. That's what I'm saying. Look, the fourth bullet point saying, look, do you think it's assessing returns based on it's not efficient? And I think it's really about being proactive rather than being reactive, no, proactive rather than being productive. So for instance, if I see someone telling me a US dollar return of 10%, I should be worried, because if I say invest in the same amount in Kenya shilling, then I should be wondering, how are they making money in a US dollar, which is as equivalent as a Kenya shilling, which is more riskier? That's something that could have speak to somebody. Guarantee funds. which is the latest craze, do we really understand their model? If someone tells you, I'm going to guarantee you 18% returns, did you take back and understand? Because sometimes what they do is, and what they tend to guarantee is, and I think this has been a concept that has been had. People have been saying this is like a pyramid scheme waiting to happen. Okay, so that's the comments that I've received, because when someone tells me, look, if I constantly get this amount of money, then that's something to worry about. When I talked about J curve in a pension fund, I think you've seen the last 2 years, there's been a lot of focus on private equity. So now, private equity is long term, 5 to 7 years. Okay, and what happens is the first 2 years, you don't make any money, you actually lose money. Now, how will you explain that to your members? That the first 2 years we are losing money, hopefully to get money over the next, 5 years. That's something that you need to consider as you basically consider what other classes. The other thing that I need to say is, do you engage the members? The whole idea is it's fine to sit as trustees, make a decision on what to do, but let's consider other members in terms of what they do. I hope I'm not going too fast, but this is the other one which I've had as well. Now, 2, 3 months ago, the government has unleashed this big four agenda: real estate, manufacturing, and a number of areas. Now, what it talks about in relation to pension is that the government realized that we have a lot of liquid funds. $10 million in liquidity. That's what we're talking about. The question is, if I was to participate in that as a pension scheme, what will I be looking out for? Now, things like liquidity, that's what you're looking at. Things like, what if this initiative does not work, right? For instance, yes, I'm building low-cost houses with the ultimate aim of getting money. What if all the homes are not taken? What if the homeowners are not taken? The whole idea is understand the business model before you engage in that initiative. So basically what I was trying to say in a nutshell is, let's understand the members in terms of who they are and what they are seeking for. Let's understand what they are, who the members are and what they seek to invest. And whatever it is, the decision that they make to invest, let's take time to understand it from start to finish so that we can basically manage the returns, not just returns, but also manage the risk as well. That's in a nutshell is my presentation. Happy to take any questions.
Thank you for that short presentation. You talked of some of the banks have collapsed, and a lot of pension money has also gone sunk with those banks.
Yep.
Do you have some due diligence tools which can help us as trustees to ensure that in future we carry out proper due diligence? I just wanted to know if there are some new due diligence tools which can help pension funds from sinking in such banks.
So yeah, the quick answer is yes and no. There is tools that we can use, and they're happy to deploy that. But also there's some things that you can look at is market sentiments. If you sit down and discuss, like when I was talking about, for instance, the US dollar investments, the comments that are hearing, and not just persistently, is people are saying, does this make sense? So if a bank comes and tells you, I'm giving you a fixed deposit at 15%, 12, 15%, look at what's going on in the market. The question is, for them to give you that 15%, what are they investing in order to give you that money? And is that sustainable? So these tools, but also you can't ignore the market segments that are going on in the market. That's probably what I could tell you. I hope that's sufficient. Yeah, that's fine. Yeah.
Thank you, Levi, for the presentation. You've talked about guaranteed schemes and leveraging on the Big Four agenda.
Yeah.
We have guaranteed scheme has trustees who manage the scheme. However, we have other forms of schemes that do not have trustees per se. For example, the umbrella scheme.
Yeah.
How will such schemes leverage on the agenda 4, especially for the benefits of the members who are not represented in the board?
I think where I'm coming from is that how can you leverage is, I think the key thing is, okay, I'm trying to avoid the word due diligence, but I think just understand what, okay, how can I give you, I mean, it's a simple example. Like if I'm planning to do this project, I take time to understand what this project is all about, right? What could go wrong, and how am I making sure that that what could go wrong is basically something that I can be able to manage. Okay, so where I'm coming from is, for instance, if I'm looking to develop projects for this particular sector, okay, I presume just a moment. If you're by umbrella, you mean that all the funds are being put together and then investing in one location? The question is, to what extent do you gain comfort at the people who are managing the fund for you? And number two, are they thought through the process of what it is that they intend to do? I think that's where you need to come from. Just what are they doing? And then the question is also, what are they intend to do? And the number three is, do you have mechanisms to monitor this on a regular basis? For instance, if I say that I intend to do X within 2 years, or this within 3 years, I intend to take my uptake will be this, am I able to come in and say, this is what you said, has it worked, has it not worked? I think it's more of oversight. I think that's probably the answer, yeah.
Thank you, Levi, for that presentation. I've got two questions for you in terms of risk, multiple risk variables. You say that creating risk-controlled global portfolios, taking into account multiple risk variables. Can you break down those variables for our understanding? And also, because risk management is quite a huge topic in terms of investment portfolios. Do you want me to ask another question, or then you answer that first?
You can go.
Okay. Secondly, just to add on to Madam who asked the question there, I'd like to also clarify on the guarantee funds within the guarantee schemes and how you determine these guarantee funds. How do you determine them?
Okay, so in terms of risk, I didn't want to put the technical words, but I'll try to put as much as I can. When I talk about things like credit risk means, can I lose the money? Okay, so things like credit risk, things like, can you lose money or not lose money? Things like liquidity risk, if I invested in this for 100 shillings, how sure am I going to get 100 shillings? Will I lose a portion of it in before getting, will I get the full 100 or will I not get a full 100? So things like liquidity, that's what it's all about. Things like market risk is basically what happens with the market. When he was talking about gold, prices, yes, they're fluctuating, but you see, when he's talking about equities, shares go up, shares go down, right? So like last year, I know equities made good money, but the previous year, it was not making good money. So the fact that you can make all those losses and over time, those are the various those are the various, in a nutshell, the three key areas are basically credit, market, and liquidity in terms of risk. Now, the other question you had was, just, I'm trying to remember that, about guarantee funds. Yeah.
Guarantee funds and guarantee schemes. Just on the risk there. Yeah, I've got, yes, thank you for the breaking down the variables. I was more interested in the risk management of the variables.
The risk management, okay, I think the simple tools, okay, let me just break down the simple tools that we can work with in terms of managing risk. So for instance, credit risk is the chance of you losing money. The question is, how much money, for instance, can you place in one particular institution? Maybe if it's a deposit, how much money, for instance, can you place compared to another bank, right? It's, for instance, the quality of that, because you see there's what happens with some organizations is they will say, I will not invest in a share or investment that gives me of this quality. There's a credit rating. So things like credit rating, it's technical, but I'll just make it very simple. So things like how much money can you invest in a particular area? How much money can I be able to place of this quality, so that if I lose money, I don't get to lose money. Those are the kind of, in a nutshell, that's what you're looking at. In terms of liquidity is, I see how much I need. Maybe at the end of the month, or maybe at the end of the year, I see, for instance, I have pensions contributions coming through, withdrawals coming out. I'll have investments maturing, investment to place. How many do I need to have in terms of market? If in terms of liquidity, in terms of market, if shares go up, that's very good. If shares go down, that's not good. The question is, how much low can I be able to allow? Okay. So for instance, if I say I'm going to invest in shares and they start shrunk it down to 20, 40%, should I be worried? Yes. Maybe I need to say, if it goes below 10%, then I cut my losses, move out. Okay, so basically those are the kind of things that you can do to basically manage the various risks that we talk about. For a pension scheme, which is long-term in nature, the question that you have to do is look at how much money we have invested, how much is it moving over time? Am I generating a return that you can get? Okay, does that answer your question? Yeah. You asked a question about guarantee funds. Yeah, just sorry.
Which guarantee funds do you mainly consider in terms of pension funds?
Which ones would I consider?
Yes, KPMG, like your organization. Which guarantee funds do you mainly consider among the pension funds?
we don't we don't usually guide people in terms of investments in terms of guarantee funds to consider. But what would ideally advise someone coming in is basically say, did you have an understanding of this person or this institution that is basically managing the funds for you? We don't recommend, basically just do an assessment of choosing to invest.
Okay, thanks. I'd like to thank Levi for that presentation. Thank you very much, Levi. If anybody has any more questions for him, he's still around, and I think you can be able to get his contact from him. Thank you very much. Could we give him a loud applause, please? Thank you. Michael is still early for the 11:45. I was going to ask another few questions before his time.
How long should it be? Half an hour, 40 minutes, right?
It's 1 hour, 15 minutes. Okay. We usually give more questioning for the because it's a stretch time for
Yeah, that's
break,
right, yeah.
for lunch.
Yeah, why don't we start now and get the presentation out of the way, and then we can have Q&A.
Okay, yeah, let me do that.
Yeah.
All right, let me introduce you. Yeah. Thank you very much, everyone. We are early for Michael's session, but we'll move straight in. And I would like to introduce Raina Michael Praise from Singapore. Thank you, Michael. We're very happy to have you here. Michael is an investment advisor, asset manager, and strategic and financial columnist. He specializes in blockchain and cryptocurrencies, as well as traditional asset allocation, investment advisory, fund management, investment research, wealth management, strategic and technical asset allocation, trading and investing emerging and frontier markets. He's a technical analyst in international work experience and fluency in several languages. Fluently in several languages, including Japanese. Michael has over 20 years of investment advisory experience, having worked in international banks such as HSBC and Standard Chartered Bank, both in research and in the investment advisory group. He has lived and worked in several countries in Asia, Europe, Middle East, and Africa, which gives him international experience with a deep understanding of emerging economies. He has been featured extensively as an expert commentator in several media channels such as Bloomberg, Channel News Asia, and has contributed as a guest writer to Business Times, South China Morning Post, and Forbes Mongolia, amongst many others. He holds a major in finance and international economics at the European Business School and is a guest lecturer at the Guarantee School of People's Bank of China. He's fluent in 5 languages. Michael's passion about financial markets translates in his current role at Ataru's as an investment specialist in client. Michael, you're welcome. You can take it over. Thank you very much.
Thank you very much for this kind introduction, and thank you for the opportunity to be here with you today. Look, I just wanted to share with you this topic about cryptocurrencies and blockchain assets. And just before we start the conversation, let me ask you, how many of you own any US dollars? Raise your hands, please. Who has some paper money dollars, whether $5 in the pocket or on a bank account? Who owns United States dollars? Some of you, right? Almost everyone, right? Okay, good, thank you. And then Michael, gentleman from South Africa, gold. How many of you own physical gold personally? Not just in an ETF, but physical gold, where you don't have bank risk. Because this presentation, we also talk about this concept of bank risk. Anybody who owns physical gold, like Krugerrands or Maple Leafs? Yeah, jewelry maybe as well. Yes, for the ladies, right? Yeah. Okay, and let me, to get an idea about the audience, how many of you own any blockchain assets, whether it's Ethereum or Bitcoin? Raise your hands. How many of you have even a fraction of a Bitcoin? So the answer is 0, right? But start here. How do you move this? Just 1 second. Okay. Look, this is actually not about investments. This is actually more about education. And I always, when I have these talks, I always sort of talk about the importance to remember Mr. Mandela's quote. Because you see, education also is about having an open mind, right? It's about learning new things. And so this whole idea of what is risky and what is safe, what is traditional, what is modern, is always about that concept of education, right? And I think a lot of us are professionals here. For example, the gentleman earlier Leo as well. It was a very interesting talk about risk and so forth, right? The one you just made, right? I always would like to refer to this, the old Chinese philosopher, to know how much we don't know, right? Okay, let me ask you, why do I bring up this slide with regards to blockchain? Because there are many successful people currently who have a very negative view on blockchain, on Bitcoin, right? And you have to respect their position as well. But again, what I would like to point out is just what made you successful in an old world does not necessarily make you successful in the new world. And hence, basically, about education again, education is what remains after one has forgotten everything that one has learned in school. I think that's why this is, I suppose, a seminar, not just a school event. It's about that. So hopefully, after this talk, we could change it a little bit. Instead of having 0 in Bitcoin, that anybody maybe have at least 100 shillings in Bitcoin or in the blockchain, right, for that matter. And this is how I would like to sort of now get into the material. The mind is like a parrot. It only works if it's open. And it's also interesting that traditional fund managers and people often are not necessarily open-minded, right? And I think that's a key point when we come to sort of the blockchain, right? So this is a slide I just wanted to start off with. What is a blockchain revolution, right? So it is fundamentally, like the internet, changing a lot of different industries. And the core industry it's changing potentially is finance. But it's actually more than that. And people talk about Bitcoin and people ask, what is Bitcoin? Bitcoin often is considered to be magical internet money. And people ask you, well, what do we make of that, right? So, but again, if you recall, just a question, when did the blockchain really come about? Which year was Bitcoin created? It was the year 2008 and 2009, when, remember, Citibank shares went from $52 to $1? And Citibank had this big advertising slogan that says, Citi never sleeps. Yeah, you could argue with all the mismanagement in the bank. Yeah, they had sleepless nights, right? But more importantly, Bitcoin came about, the blockchain, when the financial system of the Western world was almost collapsing. So again, and that's a very important point, it is a fundamentally different economic system. So let me ask you, gentlemen, the current financial system is based on what? It is based on debt, right? Michael, the gentleman from APSA, made an interesting point about gold having no credit risk, right? Blockchain assets are similar. Blockchain assets are like gold in the sense that it's often considered digital gold because it's an asset-based system, versus the current system that we have in banks and financial markets around the world is usually known, as an economist would call it, fractional reserve banking system, right, which is based on debt. So again, the blockchain is potentially changing. And here, for example, digital currency, record keeping, security markets will be impacted, smart contracts will be impacted, and so forth. And you see, it's ultimately a way of organizing society in different trusts. But this is just an overall sort of arching, sort of key summary slide. But let's go into the details. So what was money in the old days? Because you see, Bitcoin is digital money. Some people even call it digital gold, but it's often misunderstood, right? I mean, for a lot of people, the analogy that I always like to refer to is the following. Remember 1996, when the internet came about, 1994, 1996, and people said, look, the internet is email. Yes, that was correct. But the internet was much more than just email, right? Bitcoin and the blockchain is the same. Is it currency? Yes, it is, but it's actually much more than that, right? So if you think about it, Bitcoin is almost the 8th layer of the internet, right? So if you look at this, so money in the old days was basically dead people on paper, right? And coins, I suppose. This is money today often, right, on the computer screens and the banks and so forth. And this is the money of tomorrow. It's zeros and one, digitization, right? And I would like to sort of, because many of us work with banks or have been working in banks, and some of I understand, Leo, as well, you were with the regulator, right? The question comes up, what is a bank? So I wanted to start this talk by quoting Mr. Bill Gates, the founder of Microsoft. Banking as a function is necessary, banks are not. And think about this for a minute, ladies and gentlemen. So what does the blockchain do? blockchain and Bitcoin to some extent is disrupting the banks. If Uber disrupted transport, right? If Twitter basically disrupted the United States Press Corp, right? Or even the State Department, Mr. Trump is now having foreign policy directly on his Twitter handle, right? Bitcoin, the blockchain, is potentially disrupting banking. By the way, that's also the reason why traditional bankers don't like Bitcoin and the blockchain, right? But I want you to sort of think about this quote for a minute. Banking as a function is necessary, banks are not. For example, sometimes people always think like, so digital money, Apple Pay or Safaricom is money, right? It is, but it is within the sort of the nation state concept, right? And have you noticed this? What's the difference between paper money, or what we technically call fiat money, and let's say gold, Bitcoin, and things like that? What is the major difference? The major difference is that most money is linked to a nation state, right? If I'm Mauritius, I have Mauritius rupee. If I'm in Japan, I have Japanese yen, right? Gold and Bitcoin is the only money without a state. And it's also the money of the internet. It's if Skype, how many of you use Skype? Okay, give me a good example. I have some friends here, right? And I can call them, I live in Singapore. I can call them on Skype from any phone with it in a minute, right? But if I want to send them $2.50 or maybe 250 Kenyan shilling equivalent, it takes me 5 days and maybe $40 to make that transfer. On the blockchain with Bitcoin, I can do it like that within a second at no frictional cost. And more importantly, in a normal bank, I mean, question, when are normal banks open usually? 9 to 5, correct? They work from Monday to Friday, presumably, right, in most countries. The blockchain in Bitcoin is open 24/7, and more importantly, it is a bearer instrument. So what that means is that nobody can stop you. For example, again, and this is an important point, with digital currencies, especially cryptocurrencies, and later we talk about the distinction between digital currencies and cryptocurrencies, you are the bank. That's why it's actually power to the people, right? If you remember the Soviet Union, when the Soviet Union collapsed, it was give power to the powerless, right? So Bitcoin and the blockchain is giving power back to the individual. That's why also the powers to be, central banks, governments, and so forth, sometimes don't like Bitcoin and the blockchain because it makes it more difficult for them to control their own people. And when you listen to official statements by central banks, you have to keep that in mind, right? Because the central bank is ultimately, should be independent, but is also at heart serving the nation state government, right? So talking about digital currencies a little bit more. So what is a blockchain? By the way, just out of interest, how many of you have actually studied and looked into blockchain and what it is supposed to do? How many of you have had time to study blockchain already? Okay, so blockchain is a distributed database, right? That maintains growing list of data records, right? And again, this technology forms the basis of all cryptocurrencies, right? It's basically the ledger, right? If you think about it, banking hasn't really changed much over the last, I don't know, 500 years. It was, I mean, I understand many of you are accountants, right? Many of you have studied accountancy, right? The double ledger entry system. The blockchain is like that, but it's basically, it's independently verifiable and is often hence considered the trust machine. It is often known as that single source of truth that everybody can counter check, right? That's why it's so powerful. And it is the cryptocurrencies, right? Here, as you can see, that basically keep the blockchain honest and open, right? So again, just very quickly, cryptocurrencies, Bitcoin became the first decentralized cryptocurrency in 2009. Okay, here. And I suppose this is why I wanted to speak about this today. Look at Peter Drucker. Peter Drucker, of course, is a very well-known management thinker, often quoted in MBA courses and so forth. It says, look, in a knowledge-based creative economy, it is safe to assume that anyone with any knowledge will have to acquire new knowledge every 4 or 5 years or else become obsolete. Question, how many of you, ladies and gentlemen, how many of you can read and write? Raise your hands. Everyone, right? Okay. Question, how many of you know how to code? Coding. Yeah, good point. I mean, neither. I'm trying to learn coding because you see, I grew up as a banker. I studied economics, but knowing what I know today, I would rather study technology and coding because the world is becoming digital, right? So why is that important? Because I often found that people who are sort of against Bitcoin and blockchain also are very, what I consider low-tech people, right? People who have more appreciation of technology tend to embrace this concept of the blockchain easier, right? So it's not just about knowledge, it's also a mindset, right? So with that in mind, let's go through this little example here, right? These are some of the key questions also for pensions funds. And later the question, is it, by the way, is it an asset class? Should it be an asset class? Should normal people be allowed to invest in this? So these are some of the questions. Look, if the expected return on cryptocurrency over the next 30 years is either $0 or $1 million, and we are currently around $7,800 or something, then if you are a younger person, right, and you're basically faced with the same question that you had when you had equities back in the 1980s or bonds back in the 1980s, right? So was inflation going to be there forever? Because remember, 1982, I think 1981, if I'm not mistaken, US Treasury bills, right, and Treasury bonds hit also 18, 19%. It was the high inflation in the US. And since then, 1981, I think, was the top in the bond market. You had a major rally in equity markets and in stock markets, right? But if you think about it, what if these questions, because also, again, if you think as pension fund managers, right, I think until the 1970s, investing in equities was gambling. Investing in normal investing was fixed income, fixed interest, as the British call it, right? So again, it's a bit like today, when many people say, well, this is only for speculation, this is not for serious people and so forth, this is digital internet money, magical internet money, so we won't have anything to do with it. But these return characteristics, as we'll talk later in the presentation, especially when you're a long-term investor, maybe should merit some attention. And that's what I would like to bring out to you. Because you see, what's the counterpart to this? Mr. Bernanke, right, who used to be the Fed chairman, right, he said, look, under a paper money system, a determined government can always generate higher spending and hence positive inflation. And you see, look, many people now currently think and worry about this whole issue with the Trump administration and the Chinese, right? It is actually quite ironic. The biggest question, ladies and gentlemen, who is the biggest debtor nation on the planet? Who has more debt than anybody else put together? The United States of America, correct. Which is the largest creditor to the Americans? So the people who actually own the debt. The Chinese, thank you, yes. And if you're the largest creditor, you mess them around saying, look, and this is actually quite ironic as well, that maybe the current paper money system is not risk-free. I think it was Leo who pointed out this question about the risk-free rate, right? What is the risk-free rate? What is a safe asset, right? And you see, when I grew up in Germany, we had the Deutschmark that was considered safe money, right? Or Swiss francs, but currently even that is increasingly a question mark whether paper money or even, for example, the euro is fundamentally safe. I mean, people have different views on this, right? So with that in mind, let me just put forward inflation, right? Why do I show this? Because you see, usually monetary policy, right, or experiments like what we have seen with quantitative easing over time can lead to inflation, right? Correct? However, it's never been done in history where you had so much monetary printing and you don't know what the outcome is on this. So if you move forward, right, Okay, by the way, why I'm saying this? Why, for example, you might think, is there suddenly a Reserve Bank of Zimbabwe $50 trillion? I think the highest was 100 trillion, right? But why is this relevant to Bitcoin and the blockchain? Because Bitcoin is, if you think about it, it is a deflationary currency, right? So just stepping back, what's the difference between this, the United States dollar, Kenya shilling, Turkish lira, and any other paper money? What's the difference? Well, paper money or nation state currency usually has unlimited supply. The central bank can print as much as they want, but it has limited borders, correct? Blockchain assets, on the other hand, have unlimited, no borders basically, but limited supply. So if you think that through, you could argue that maybe deflationary currencies like Bitcoin or in particular physical gold, right, have a place in the portfolio because they're unrelated, uncorrelated to paper money. Okay, so how is this seen in the world? For example, the Australian Stock Exchange, right, was the first stock exchange to adopt blockchain earlier this year. So again, traditional stock exchanges have increasingly looked at how do we deal with blockchain and what can we do here, right? And it's also interesting, NASDAQ, right? NASDAQ, of course, in the United States is a technology market who is very forward-looking, right? NASDAQ itself has talked about trying to become a cryptocurrency or becoming a blockchain market or a crypto market. So it's interesting as well that the leading stock exchange in technology in the United States is increasingly looking at what it means to to move on the blockchain. And again, while we sit here and you might think, what is this all about? And I would like to sort of refer to this quote by Arthur Schopenhauer, which was a German philosopher who said, look, all truth passes through three stages. First, it is ridiculed. Second, it is violently opposed. For example, first ridiculed, Bitcoin is a scam. It will go to zero. Only criminals use Bitcoin. Secondly, it's violently opposed. Every bank says, no, we cannot. Have to ban it, right? What if government regulations will come in to ban it, right? And thirdly, is it accepted as self-evident? And this is a quote from, I think, 1800s, right? So again, to share with you that a lot of these sort of evolutionary stages are very common, actually. You might be thinking about electricity. If you think about it, when electricity first came about, many people were against it because in certain instances it burnt down houses. There were people who said, we don't want electricity because of the risk of a burning house. Now, of course, everybody would think differently, right? But again, this is one thing to keep in mind when we talk about blockchain, that yes, it tends to go through different stages of acceptance, right? So what I mean by this, sort of the changing narrative. In 2012, the question was, what is Bitcoin, right? To many people, right? In 2013 is, well, Bitcoin is useless. And the next year it was, Bitcoin is mostly for criminals. It never passes KYC, know your client, or anti-money laundering jurisdiction, no questions, right? And then in 2015, it must surely fail. It will go to zero, right? Bitcoin has to be regulated. And then last year it was, Bitcoin is a bubble. And today, this year, it's very interesting. Now people have said, look, all these excuses don't necessarily work anymore in 2018. So now the narrative of many people and government officials often is, oh, well, wait, we like blockchain, but we don't like Bitcoin. By the way, if you think about this statement, does it remind you of the year 1996? By the way, how many of you were involved in internet and things like that in 1986? There were many people who said, look, banks, for instance, they said, look, we don't like the internet. We cannot control the internet. What if anybody puts something on the internet we don't like? We can't censorship, right? So a lot of people at those years said, look, we like the intranet. I worked at a bank at that time, and our bank had an intranet. Only people within the bank could see it, right? But the idea of putting something officially on the internet, no, that's too courageous. We cannot do this because it's global and wants it off, right? So it's a bit like this, because if you think about it, the argument that we like blockchain but we don't like Bitcoin is the same as saying we don't like the internet, we only like the intranet. Because the reasons applied to open blockchain and internet are very similar, right? And then next year, most probably, we will see a shift. We can do business with Bitcoin, right? So without further ado, have a look at this, please. So the queue is currently, right? Major banks, governments, everybody is talking, okay, what is blockchain? How can we do this? And how do we basically understand this new space, right? And then many people just tell me, look, when should I buy? When should I sell? I heard this thing has been crazy. It's gone up a lot. It's gone down a lot. When should I buy and sell? You can see here, right? But have you noticed here, understanding Bitcoin? And I suppose for our 40 minutes that we have together, I would like you to, all of us, think a little bit about what is it exactly? What is the blockchain? It is ultimately game theory. It is economics. It is also legal structure in a sense. I mean, how you should organize society in a way, right? So going forward, these are some of the sort of the new asset class terms that come up, right? Smart contracts, data, right? Things like this, right? So just to summarize, a blockchain is a based distributed ledger that contains multiple of properties, and they also particularly useful to trade finance, right? It's immutability and time stamping, right? Provenance of goods, streamlining settlements, person-to-person transfer of ownership of digital asset, right? Smart contracts and automation, secure distribution of single source of truth. By the way, to peer, why? Okay, this concept of cash gives liberty, right? Cash gives freedom in a sense, right? So again, it is peer-to-peer. It is also a bearer asset in the sense that whoever has it owns it, right? It's a bit like the gentleman Michael was saying about gold. Your gold is nobody else's liability. Your Bitcoin is nobody else's liability either. And more importantly, it is censorship resistant. What that means is that you can choose who to send it to, right? Nobody can stop you. For example, if you're in a bank and the bank, for example, doesn't want to make your transfer, then you're stuck. And it's also the concept of money. If you think about it, question, if you have money in the bank, is it your money? I mean, by the way, how many of you have lawyers here in this room? How many of you have studied law? Okay, question, if you have money in a bank, is it your money? Huh? Not really, it's a claim. You have a claim on it. It's not your money. If you have the money in your hand, right? That's why, for example, you're a creditor, right? You're a creditor to the bank. So technically you take credit risk on the bank. If the bank suddenly says, look, I don't want to give the money back to you, what are you going to do? And these are very deep questions. For example, when we talk about the blockchain, look, have you ever noticed why is the United States the world's reserve currency? Have you ever thought about this? And by the way, what does it say on the back of the United States dollar? It says, in God we trust, correct? Because it's trust in the system. But what people also should think about it, the United States has the largest military in the world, correct? So Malawi most probably will never be the world's reserve currency because Malawi doesn't have the largest military in the world. So what it means is, from a legal point of view, if the Americans want to enforce something, it helps if you have a larger military, correct? So again, hence all these things, and this is again, why is this relevant today? You might be thinking I'm talking about something which is not relevant, right? But if you just listen to what Mr. Trump says recently, right? It is about restructuring the world order, right? Whether it's trade relationships, government relationships, and so forth. Even how, for example, the White House is communicating with the average American is now changing, right? And the blockchain, again, is changing the way potentially economic activity is measured and so forth, right? Question, how many of you are auditors? Anybody who has any audit experience? Okay, because the blockchain potentially is the auditor. I mean, there were some, I think even KPMG, if I'm not mistaken, had a report out there saying that if blockchain becomes more prevalent, the demand for auditors will reduce because everything is on the blockchain and that is the single source of truth. It's a bit like the example before we started the day, I think, Joseph, they had a video saying that, for example, banking, more and more people become less, I mean, there are less people in banking. For example, if you look at this trading floor of Goldman Sachs in New York, 20 years ago, there were like thousands of people. Now, increasingly, you see more machines. And here again, the Bitcoin revolution is ultimately moving into much more digitalization and also means less people, right? This is an article I've written for the, and I'll send it to you if you want, about cryptocurrencies as a great African opportunity. This was published in the Singapore University where we work with. And again, why is this important? Because if you think about it, right? Look, I'm originally from Germany, but I lived in Japan and my wife is Korean. And I remember this very clearly. When we grew up, right? My wife, everybody looked up to the Japanese, right? But what happened? What happened over the last 20 years? Think about this. How many of you have any Japanese mobile phones? 0, correct? How many of you have Korean mobile phones? Samsung? Quite a bit, right? So what was the change? And this is important to Africa as well. Look, Japan was very strong in what they call analog, right? When the world shifted from analog to digital, the Koreans went all out. I remember this. I was actually in Korea at that time, and when you're on the highways, there were big billboards that says, the internet is our second chance. And just to share with you on a national level, because Japan was successful, right? It's a bit like if you work in a successful bank, Barclays Bank of Kenya maybe, right? You think you're safe. But so thought the Japanese. But when the system changed, when the world moved from analog to digital, and there was no competition in digital because it was all new, correct? It was the Koreans who went all out. That's why today Samsung is one of the leading companies in the world. And when I go to Africa, everybody says there are Korean companies everywhere. I don't see many Japanese companies, right? So, but why is this important to Africa? Because in Africa, we should be similar to some of the other speakers today. We should be forward-looking, not backward-looking, right? There's no point trying to replicate the British banking system of the 1950s when we are in the 21st century and it's going digital, right? So here, this article basically talked about of some of the challenges in the current setup, but also the opportunities. So there's a quote in there where the Central Bank of Nigeria said, look, we cannot control Bitcoin or the blockchain, so hence we should embrace it. But if you want, I will send you the details here, but it comes down to these questions. What really is currency? Currency is basically 3 different areas of money, if you will, right? So we had commodity-based currencies, and I would call gold as part of that, right? Politically based centralized fiat currencies, and mass-based decentralized cryptocurrencies. Have you noticed this word here, politically based? And have you ever noticed why politicians hence don't necessarily like Bitcoin or the blockchain? Because it is not politically based money. That is actually pretty obvious, right? But it's actually a very deep question because it's really the money of the people, and it's the money without a state. And later on we'll see it's actually ultimately a network effect. So von Hayek actually made this point that privately competing currencies, right? I understand in some African markets and countries you have a black market for the currency, right? You have, for example, the official banking rates and you have the unofficial market, right? And this is actually ultimately here supply and demand. Completely globally decentralized, right? And why is that important? Because it's also censorship resistant, right? So no government can shut it down. That's part of the reason why necessarily some governments don't like it, right? But if you think about this global map, right, it is increasingly where everybody who is on the blockchain suddenly becomes their own bank. This gentleman, Mr. Gruber. Gruber used to be the CEO of UBS and Credit Suisse. And he said, look, Bitcoin could become the new Swiss franc. Out of battery, I think. Thank you. Hello. So again, just to reconsider what is the blockchain. And I would like you to pay attention to what is here in green. Look, it's foundational technology, and it's create new foundations for global economic and social systems. Question, why do we have the word social systems here? Okay, and why, for example, is Bitcoin very, in my opinion, the blockchain very powerful for Africa? Because in Africa, unfortunately, too many governments have failed their own people, right? There were cases where some African dictators had hundreds of millions of dollars in Switzerland, but their own population wasn't able to have a proper life, right? With something like the blockchain and Bitcoin, it would be more difficult for dictators to actually have any of these situations. And again, hence, it is fundamentally changing social systems, right? The way to think about this is like Uber, right? If, for example, you suddenly have your own car and you can make it available for other people to drive in, that means there's a job that wasn't there before, right? So think about it from that perspective, right? So again here, attack on traditional business model with a lower cost solution and overtake incumbent firms quickly, right? So just very quickly, in Africa, trade finance is a very big area, right? Blockchain and trade finance are actually often very much interlinked. And this is the area that I see great potential in, especially for developing countries, where if you think about it, trade finance can, right? All these things suddenly happen in real time. So this is actually from Deloitte study that actually points out all these different areas of how this potentially leads to blockchain and trade finance. And here again, if you see it, the system is increasingly feeding into the blockchain, right? So look at this slide for a minute. In the old days, you had the bank in the middle, correct? Now you have the blockchain in the middle, right? So the bank is just one part of the thing, and it's not necessarily the center anymore, right? Because it's decentralized, right? Have you ever noticed the word Central Bank of Kenya? The word is central, correct? That is a thing of the past because it's now decentralized, right? It's more like this, right? For example, some people that have not spent time on blockchain or Bitcoin ask me, where is it listed? I say, well, it's not listed anywhere. It doesn't belong to anyone, right? It's like the internet's globally distributed, right? So with that in mind, just very quickly here, crypto technology benefits. I would like you to sort of look at this and just think about this for a minute. So here you have, right, the banks and corporates, right? This is the key point here. For example, you have reduced error rates, you have lower costs. You free up resources to focus on core business, and it's a level playing field for all participants. Okay, why is that an important point? Level playing field for all participants. Think about it for a minute, right? Even 20, 30 years ago, if there's an IPO, right? Initial public offering, you needed to be a wealthy person to participate, right? Now with the blockchain, you have often what is known as ICOs, initial coin offerings. It's crowdfunding basically, right? So I can be a poor kid in Malawi, have an idea, and you can get investors from around the world directly coming to your project. It's again, fundamentally disrupting old financing models, right? So the whole idea of venture capital is turned upside down. You don't need necessarily special club access to be involved in this. Anybody can choose to participate in this, right? So again, on the blockchain, you can have a lot of funding that wasn't available otherwise, right? And again, it's a fraction of a dollar or something you can invest, and hence basically this point here, level playing field for all participants is exactly the thing. And remember, we talk about social structures, right? In the United Kingdom, we had Brexit. In the United States, we had Trump, right? Why is that? Because again, later this afternoon, we have another presentation about pensions, right? And pension fund management and changes in the industry, right? The unfortunate truth is that the rich people get richer and the poor people get poorer, especially in Western countries. I think here in Africa, you might actually see it the other way around. You're creating more of a middle class, right? In many countries that were previously prosperous, you actually have the gap widening even more, and that is leading to social problems as well. But here, again, with the blockchain, you suddenly have much more economic inclusion. So again, remember there was a slide saying, look, currently the narrative is we like the blockchain, but we don't like Bitcoin. So let me ask you, what's the difference between an open blockchain and a closed blockchain? So an open blockchain is basically, as you can see here, open distributed ledger that can record transactions between two parties efficiently and in a verifiable and permanent way, right? So the ledger itself can also be programmed to trigger transactions automatically, right? So they are securely by design an example of distributed computing system by high Byzantine fault tolerance. Decentralized consensus has therefore been achieved with the blockchain, right? So the first blockchain was the Bitcoin blockchain. And here, because of this, it is actually use of trusted authority over a central server. And that's why, for example, it is important, because if you think about it, if it's not an open blockchain, then it's nothing else but a distributed database, right? And again, this might be too much for this lecture this morning, but think about it, that the Bitcoin itself, the currency, it keeps what it is, the token that keeps the blockchain honest. Without that, you would not have the verification mechanism that keeps the blockchain honest, right? So hence, there's a lot of value on an open blockchain. This is one slide of how, for example, the ecosystem has been growing since 2009, right? And you see a lot of things are being based on top of this. For example, smart contracts is a great example, asset registry, right? Okay, let me ask you, if for example, you own a plot of land in Naivasha, here in Kenya, right? How do you prove it? Usually you have a piece of paper, correct? Right? And that piece of paper is usually in a building, correct? Maybe on the 5th floor, there's a government official who sits there with a stamp and it's in a drawer, right? Question, ladies and gentlemen, what if that building burns down? Right? What if that paper is destroyed? How do you prove that you have it? It's a bit like a university degree, right? And think about it for a minute. I actually lived in the Middle East for a while, and it was very funny because in our countries, nobody actually thinks you would fake your university degrees, right? And if you do, then later on you get fired anyways, right? But when I worked in the Middle East, they wanted me to prove that I actually really have this university degree. So I had to go back to the university, get a certified stamp and so forth, right? If it's on the blockchain, it's for the world to see. That's why, for example, now American universities like MIT, Massachusetts Institute of Technology, the new degrees they're actually issuing them on the blockchain, actually technically on the Ethereum blockchain, so that anybody in the world can check it. So a bit to the land register here, right? If I own a land in Kenya, right, it's not physical anymore. Anybody can go to the blockchain entry and say, oh, this is verified, and they have it, right? Correct? So that's why, to some extent, it also gives the power back to the people. The government cannot expropriate you anymore. For example, if I own this if I own this land, but there's a government official that says with a gun, says, look, I want you to transfer this, otherwise there will be consequences. It happened in some countries, unfortunately, right? So again, the blockchain gives the power back to the people because it is increasingly difficult to fake later. So it's a true entry, right? And that is actually very powerful. And this is why on top of that, you potentially can have so-called smart contracts. By the way, smart contracts will completely change the legal system, right? It's a bit like, for example, if you have a deposit, right? A deposit in a bank is usually a contract between the bank and the depositor, right? A lot of these things potentially will move into smart contracts. And that, again, is often driven through, in this particular case, the Ethereum blockchain, right? Okay, just talking about, let's say, the volatility of this asset class. It has been very volatile, and this is what people said often, oh, it's gone up a lot, it's went down a lot. But ultimately, look at this. As a pension fund manager, it's about long-term returns, correct? Look, if you do the math on this, please tell me whether you have seen any asset class in the world that had these returns. And just think about it for a minute. Like last year, in 2017, we went up 1,297%. And this year, of course, it's down 52%. But just give an example. A year ago, we were roughly at $1,100. Today, we're at $7,700. That is still, what, 7-8 times your money? But let me ask you, which pension fund in Africa had any allocation to this? Zero, right? But they own United States government debt at 3% when you lend to the most indebted nation on the planet for the privilege of 3%. You see, that's maybe too strong a statement, but just think about it for a minute, right? And you see, look, increasingly the world is becoming less nation-state focused, become more of a global village, right? People on their smartphones and so forth. So I don't know whether you actually saw these numbers, but I would like to reflect on this for a minute, because in this particular, in hindsight, of course, looking, but it's always good to sort of learn about history and look at these numbers. And have you noticed that the volatility is usually here to the upside? So hence, this is the whole argument that if it's about risk and return, as the other gentleman was saying, or Michael was saying that, right? You should have maybe 1% of your portfolio in some of these new asset classes, because if they do well, they do extremely well. If they go to zero, you lose 1%, right? So that's one of the arguments why I suppose education is the best investment. Remember, especially since we're all professionals, and even if you're a retail investor, never listen to anybody. Always make your own judgment, right? But what that means is you have to read around the subject. You have to try to understand the economics behind this, right? So this was an article I written for Forbes Indonesia. It was in April when it was at $1,290. And by the way, the year ended at 19,000. So just to share this with you, but more importantly, at that time, right, almost nobody was interested. And that's often the irony, that the best investment opportunities where most people have no interest in. But when the market is, but I share with you, the same people who said no at $1,000, at 19,000, everybody wanted to buy. And at that time, we would say maybe it's gone up a little bit too much. Again, why is that important? Because in financial markets, even in pension industries, there's a lot of herd mentality. Why is that important? Because on Wall Street, there's this old saying, you never lose your job if you lose your client's money in IBM or Citibank. Or today, Facebook maybe, right? A company that everybody knows. But does it make it safer? Maybe not, right? And especially when it's about pensions, is ultimately about what I call the burden of trust, right? And you see, if you share the idea that the world is changing fundamentally, this is an area that everybody of us should actually spend some time on, trying to understand what's really driving it, to hopefully make better decisions in the future. So think about it. It's the first network-centric protocol-based form of money, right? Money is the ultimate network effect. Have you ever thought about this? What is money? It's a network effect, right? And look, it's a network-centric money, and network-centric money is censorship resistant. I would like you to think about that part for a minute. What does censorship resistant mean? I think to the point that Michael from our colleague from APSA made. Why do central banks own gold? Because gold is also censorship resistant, right? For example, why are the Chinese and the Russians now buying gold? Increasingly, the central bank reserves of gold are rising because they increasingly don't trust the dollar. Especially when you have somebody in the White House that says, look, America is the largest debtor nation, and as Mr. Trump pointed out, if you don't like what we're doing, we just default. Huh? On trillions of dollars of debt? No, these are not my words. This is Mr. Trump's words. Just check it out. That means that the world is looking for alternatives, right? And for a while, the European currency was an alternative, right? And by the way, just with that in mind, let me ask you, what was the downfall of, remember Iraq? Who was the leader of Iraq? Huh? Saddam Hussein, right? Among other things, what was his downfall? And who was the president in the United States at that time? George Bush, right? George Bush is an oil man. He comes from the oil industry, right? And the Americans price oil in dollars, as we all know. So Saddam Hussein, rightly or wrongly pointed out, had the idea of, look, why don't we just price oil in euros? That was one of the reasons for his downfall. That was one of the reasons why the oil lobby in America felt he is trouble, let's please remove him, because questioning the status quo of the system does not necessarily benefit the largest economy in the world, right? So hence, a lot of these things, like, for example, censorship resistance, are very crucial points, right? And just ask our Iranian friends, right, who are now being cut out of the dollar market, right? These are very important philosophical questions. There's no real answer for this, but it's important to think about it because geopolitics is changing, right? For example, I have a friend of mine in Kazakhstan who told me that the border between Russia and China, right, and there's a lot of trade going between the two countries, right? In the old days, it was increasingly dollars. Now it's increasingly Bitcoin. So the Chinese and the Russians, increasingly business people, trade with each other with Bitcoin because, number one, it's more transparent, it's cheaper, and it's faster, and they don't necessarily are stuck in the banking system. You know what I mean? So that is just one example, right? But I would like you to point out this, and this is the key point. It greatly disrupts centralization of power. Think about this sentence for a minute, right? The blockchain, in particular Bitcoin, greatly disrupts centralization of power. And that's really the key point here. And also, if you think about it, right? Centralized debt-based fractional reserve banking system versus globally distributed, immutable, permissionless, asset-based crypto blockchain system. That is really the challenge, ladies and gentlemen, right? For example, the United States Secretary of the Treasury, right, Mr. Mnuchin, the other day wanted to, the largest bank in China is ICBC, Industrial Commercial Bank of China, right? Mr. Mnuchin actually threatens the Chinese to cut them out, ICBC, out of the dollar wholesale market because, in their opinion, ICBC was money laundering, right? I mean, to some extent, that was this Trump trade rhetoric, right? But think about it for a minute, right? The largest Chinese bank being pulled out of the dollar market. That's why, for example, increasingly some African countries, somebody even said this here, I think you said it yesterday, right? Should African countries accept more renminbi, yuan, the Chinese currency? Who knows, right? But again, increasingly, look, these are important questions and they're all changing, right? And hence, basically, the key thing to remember is that Bitcoin is here, as you can see, it's a radical break from the past. So understanding the way traditional money does work doesn't help you understand crypto assets. And this is an important point. Look, I have a lot of respect for Mr. Warren Buffett, right? Mr. Warren Buffett is a very successful investor. But I think 5-10 years ago, Mr. Warren Buffett said he would never invest in Amazon.com. He also said he would never invest in Bitcoin, right? Well, Amazon.com is now Mr. Bezos, who started Amazon, is now the richest person in the world, and the share price has gone up tremendously, right? So again, what I mean by that is just what made you successful as a traditional investor, right, could be a disadvantage when the world is changing rapidly. Keep that in mind, right? Keep that as a thought with you, right? So again, these are some of the returns we spoke about, right? So last year, what, 1,500% up. For example, this is another one. Ethereum went up 13,000%, right? Just think about these numbers, right? It went from $13 to, I think, $1,500. And you see, it's not about the money. What you need to understand, what is driving it? For example, I invested in Safaricom early on, right? And I think the share price went from 5 to 280 to 3, and that was flat, and then went all the way up to 30, right? But what you needed to understand is that Safaricom is much more than telecom. It's M-Pesa, right? In this hotel, you can pay the bill with M-Pesa, right? Correct? I don't need my Barclays UK card anymore, right? That is revolutionary, right? So think about Bitcoin like a global M-Pesa, right? And that actually to some extent explains, I don't know whether you've seen this, but Safaricom share price versus Barclays Bank of Kenya, no comparison. We should be better off in Safaricom than in Barclays Bank of Kenya stock, right? So that's the argument here, why also as a fund manager, one should potentially look at cryptocurrency and blockchain assets. And just look at these numbers, right? So that number is 27,000%. May I ask you, what's your average return on your local pension fund? Huh? Yeah, 13 is still very, very good. Yes, of course, but that's brilliant. But we talk about this because many pension funds actually will find it difficult to create returns, right? And what I'm trying to share with you is that returns are usually in areas where people don't think about. Right? Of course, there's risk, but again, in this particular case, you got paid to take these risks, right? So, okay, look, this is the chart that often people tell me, "Oh, this looks like the Bitcoin chart," right? Well, this is not the chart for Bitcoin. This is the chart of the United States monetary base increase. And by the way, it looks similar to the stock market. So again, in terms of how much money was created, it was a lot of money that was created in the system. The only unfortunate thing was a lot of that money went only to privileged people, right? The 1% people in America are richer than ever before, but the average people are much poorer. I was in New York a few weeks ago. I was speaking to the taxi driver, and he told me his life is worse now than it's ever been, right? Right? And there's a lot of discontent. So a lot of people, average people, have actually lost out on the so-called stock market boom in the United States. But what I would like to show you here, central banks, right, balance sheet have imploded. And this is the point that this gentleman, Michael, made about APSA, from APSA, right? Gold and blockchain assets is the antidote to central banks, right? When everybody trusts the system, nobody's interested in gold. For example, now currently, I did a Google search, right? Apparently Google search buy gold is the lowest since 2008. The market globally is not interested in gold, but to me that's actually a positive thing. Because the so-called systemic risk, right? Systemic risk is very high. And if you think about this for a minute, right? So think about systemic risk. The one interview that was very interesting to pay attention to was the German Bundesbank. The German Bundesbank is often considered to be one of the more responsible central banks, right? Germany was considered a sort of safe country, right? He was saying, look, he's worried about Bitcoin, but not because of Bitcoin investors. He's worried about flight of capital. He was saying in the next crisis, the so-called dumb money will be stuck in Italian banks and Italian government debt, and the smart money will increasingly go into blockchain assets, and we cannot control it. That's one of the reasons why central banks are worried about it. And that's why, for example, similar to gold, there's a sort of misinformation campaign. I don't know whether you heard this, but the Polish central bank has actually paid advertisers to take out campaigns to inform the people of why blockchain assets like Bitcoin is not good for them. And later on is what found out and was disclosed. But think about this. In the Czech Republic, neighboring country, on the other hand, there was a survey done that the average young person in the Czech Republic trusts Bitcoin more than the euro and the United States dollar. And it's quite interesting as well. Look, I live in Singapore, and Singapore, of course, is a very, very proper country, and it's a very stable country, right? So when I speak to my Singaporean friends, they don't necessarily get it, why you should own gold or Bitcoin, right? But if I just talk to the neighboring country, Malaysia, or countries where people had never really trusted the government, there's a much higher acceptance for something like Bitcoin or physical gold because the people know that they cannot trust the government, right? So again, and this is the big question as well, right? That correlation between trust in the system or alternative asset classes, right? And we're potentially at a level in the world where even the trust in the system is being eroded. Just look at what's happening in the United States. Look, when I grew up, right? If I would have told you with a straight face that there's even a rumor that the president of the United States is paid by the Russians, remember some people allude that there's a collusion between the Trump administration and the Russians, I would have laughed at you, right? But that's the reality of the world today, right? So the more the system, the trust in the system is eroding, the more the demand for physical gold will go up, gold as an asset class, and also blockchain assets. Because again, it's like gold, it's not owned by any country, not by any nation or any particular person. And that's ultimately the true investment case, right? So just to share with you, it's also very volatile. This is just one slide that shows, for example, the market cap, how it has gone up and down. And it is volatile. And this is really basically, this is as of a few weeks or 2 weeks ago. Now we're at $284 billion. So it is actually, relatively speaking, small in the overall scheme of things. But just think about this for a minute, right? According to the World Bank, what's the biggest problem in the world at the moment? Debt, right? Question, what is the most preferred asset class for many people? Debt. You see the irony of this? You think about it for a minute, right? For example, many people have said that what the Chinese have done to African countries was actually not good because too many African countries have taken on too much debt, right? And on the other hand, with a blockchain system, you get rid of debt because it's an asset-based economy, right? So that actually is an important question as well, right? This is more on a nation-state level, right? And maybe, for example, the IMF level, right? Okay, this is an example from South Korea. So for a while, there was a 30% premium to Bitcoin prices in South Korea. Let me ask you this. Why do you think that was the case? So basically, you could have bought Bitcoin at $100 in, let's say, in London or New York, and sell it in South Korea at 30% instantaneous profit. It was like a money machine for a while. Because Korea is much more technologically advanced, right? For example, my wife is Korean. We have an aircon that talks, you know. And think about it for a minute. There's much more demand for digital currencies there because they seem to get it more, right? So just to show you this premium, right? Right? So what I'm trying to share with you is that Korea as a nation, and don't forget, they also create one of the most sophisticated handphones, like Samsung smartphones and so forth, right? As a nation, there's a lot of interest in this more than others. And by the way, there was also, a big premium for Bitcoin in Zimbabwe. For example, I was once teaching a course in South Africa where we had people from the Reserve Bank of Zimbabwe, right? And they told me that even in the local market, there's hardly any liquidity. Everybody wants dollars and so forth, right? So again, there, that premium means that the people play less. They rather have Bitcoin than the local currency, basically, right? And it's quite interesting to just look at this and keep that in mind, that in South Korea, there's a so-called kimchi premium. Kimchi is that cabbage they eat, and they call it kimchi usually. This kimchi premium was close to 30%, right? Over world markets, right? Okay, think about this for a minute. We spoke about, let me ask you, the traditional pension fund usually invests in these things, right? Global bonds, Barclays, and we have a friend from Barclays, correct? Yeah. The Bloomberg Barclays Global Aggregate Total Return Index. How much was the return? 3.95%, right? Okay, on $100, you have $103, right? If a coffee costs $3, after 1 year, you can buy one coffee, correct? Simple like that, right? So equity markets, Bloomberg World Primary Equity Maps, 15% last year. Actually very good if you think about it. This was July, right? Blockchain index, yeah. So look, what is risk? Risk is not a function of what you buy. I mean, I think Leo made that point as well, right? He's also CFA qualified, right? A risk is not a function of what you buy. Risk is a function of how much you buy given the size of your portfolio, right? So when you look at these returns, right, suddenly you move from 3% to 300%, right? You need to understand what is driving it. And more importantly here, public opinion and investors' minds are very divided and often comes down to philosophical and even emotional debate. And I would like you to reflect on this for a minute. It comes down to a philosophical and even more emotional debate. Look, I do a lot of business in the Soviet Union countries, right? Kazakhstan and Russia, right? And we know some of the rich people in Russia. But the average Russian sometimes still thinks that communism was better, right? So again, it's a bit like a philosophical question. Just a free market is not always good for anybody, or the capitalistic system, right? Because often the capitalistic system means that the average person cannot really participate as much, right? Blockchain, on the other hand, is basically very inclusive. But just think about it, why there's such a big debate about whether blockchain, Bitcoin is good or bad, right? Is because it's fundamentally a philosophical and even an emotional debate. I always refer to religion, right? Some people are really, and that's why it's difficult to discuss, because it's fundamentally how you should strike in capitalist, or should be more like the European middle of the road model, right? Look, it's a philosophical debate. There's no right or wrong, right? But this is what to keep in mind, why in the media, for example, there's so much media attention, and why do many people have so many strong views on this subject, right? Because I think it's fundamentally changing the current power structures, right? Okay, so also increasingly we have media coverage, right? And this two slides are for our friend from APSA here. Look at this, who spoke about gold, right? So a top Wall Street strategist sees Bitcoin cannibalizing gold and could be worth as $50,000. So look, gold is, by the way, I'm a firm believer in gold, and I think everybody should own gold in their portfolios. The question is how much, right? I mean, I think asset allocation guidance would argue 5 to 7%, 8% in gold-related investments is prudent investment. But I think 2 or 3% should also be in Bitcoin. But if you think about it, I have a problem emailing my gold, right? If, for example, Michael sits in South Africa, I'm sitting in Singapore, I cannot just email him my gold holdings, right? With Bitcoin, I can email it within a second, and after 3 confirmations on the blockchain, he is credited to him, right? And there's no credit risk. So some people are saying that Bitcoin can go to $50,000, $100,000. Some people even have $1 million target on it. You might think these people are crazy, right? But it's always important when somebody has these price forecasts, right? What is it based on? I remember this very clearly when I think Morgan Stanley had a research report on Safaricom, and they talked about 18 bob, 18 Kenyan shilling, and people thought it was also crazy because at that time I think the price was around 380, right? And some guy in New York on Morgan Stanley says, look, Safaricom can go to 18. It actually went to over 30 if I'm not mistaken, right? It's always interesting when you read these research reports or these calls to understand what's the thinking behind it. Why do you think it could ever go to these levels, right? So that is a chart I wanted to show you here. And this is again to the previous presentation. Gold is money, everything else is credit. 1912, right? Okay, today the year is 2018. I would argue the same. Bitcoin is money, everything else is credit risk, right? But today we're in the year 2018, and I have my Apple phone, right? And this is, again, an interesting example. I don't know whether you saw this, but this company, right, Apple, has more cash on its balance sheet than the United States government. I mean, that's also an interesting observation, right? So, and this is a global company, as many people know, right? So, by the way, think about this for a minute. The concept of interest, right? Have you ever noticed why gold doesn't pay interest? Why cash doesn't pay interest? Because by getting paid interest, you take on so-called credit risk, right? Bitcoin also doesn't pay interest because you don't have credit risk. So this is a subtle but important difference. Why, for example, here is Mr. JP Morgan, John Pierpont Morgan was saying everything else is credit. And this is an important point I would like to, again, reiterate, emphasize, drive home. The blockchain assets are an asset-based system, right? For example, like I'm from Germany, so I was raised in a Christian country, but I've been spending some time in the Middle East and I've been studying financial Islamic finance, right? Why is, for example, blockchain and Bitcoin like gold? Why is it Sharia compliant? Huh? Yes, exactly. Correct. It is actually asset-based, right? So hence, that's an important point why, for example, Islamic finance is actually endorsing blockchain assets, because their blockchain assets as an asset class are asset-based, they're not debt-based, right? So just look at this for a minute. This here, the source is Demerse has an incremental AG in Switzerland, right? So market capitalization, Bitcoin, silver, gold. Look, looking at this, you would argue that maybe if you have 8% in gold, you move 1% of gold into Bitcoin and potentially you could be better off. And that actually happened because I think last year we moved from $700 a Bitcoin to 1,300, and at that time was overtaking gold. And gold today is also 1,000. No, today it's 1,222, if I'm not mistaken, right? Actually below that, right? But Bitcoin went from 1,300 to 7,800 today. So it very much outperformed gold, right? But if you look at these statistics, and I very much like the gentleman's presentation about gold, right? The only problem is with this phone, I can actually send my Bitcoin to a friend in North Korea or in Venezuela or even into Turkey within a second. Sending his gold will be a little bit more difficult, right? So that is exactly the argument here, and this is why, for example, you get to some of these forecasts, right? That sort of substitution effect. And think about it, right? People who grew up on the internet, for example, younger people, right? For example, a friend of mine, with his children, he says they don't pick up the phone call. They say, email me or WhatsApp me, right? Talking on the phone is uncool, right? They might also think that having paper money is uncool. They also think that physical gold is maybe less optimal in a world that is globally integrated and you're on the internet 24 hours a day, right? So to put this into perspective, again, why, for example, it makes sense to some people, right? Look, putting the world of money into perspective. So this is the current market cap. Actually, it's much larger now, right? But look at this, Bitcoin here, right? All cryptocurrencies is now 700, but look at this, Amazon, right? Here, physical money is at 31 trillion, right? And this is here 8.2 trillion in gold, right? So as a financial practitioner, some people actually argue, by the way, you know the gentleman who created Twitter? Jack Dorsey, right? Jack Dorsey, of course, Mr. Trump is very fond of him because Mr. Trump uses Twitter for his foreign policy, right? And for almost everything, right? Very much spooking the world, right? Tweeting at 3 o'clock in the morning from his Trump Tower in New York. But look, Jack Dorsey, who was the founder of Twitter, right? He was in the media saying that in his opinion, Bitcoin could become the new reserve currency of the world. That, of course, is a big statement, right? But if I would have told you even 5 years ago that the President of the United States conducts foreign policy on Twitter, people wouldn't have believed it either, correct? So just put this into perspective that here, it's still early days, right? And here, especially if only 1 trillion of this would go from physical gold into digital gold, we could be at $250,000 a Bitcoin, and it would still be cheap. Okay, this is what the IMF had to say, right? So the IMF, of course, is the International Monetary Fund in Washington. And this is an important point. The boundaries are blurring. Remember we talk about Bill Gates, right? Banking as a function is necessary. Banks are not. And when I hear this statement by Mr. Gates, I always think about Safaricom. Because luckily enough, I invested in Safaricom. But Safaricom is not a bank. But it's better than a bank in my view, right? And think about this for a minute. Once we go from traditional banks into the blockchain, right? For example, in some countries, old bank buildings will be museums. There will be nothing there. It will be interesting to look how it looked at the past, right? Just think about it for a minute, right? Also here, for example, in a report by the IMF suggests that banks, that is traditional banks, right, should consider investing in cryptocurrencies more seriously than they have in the past, right? And here again, this is the IMF, right? So the head of the IMF is the French lady, Madame Christine Lagarde, right? She had the following to say, look, in so many ways, virtual currencies might just give existing currencies and monetary policy a run for their money. Look, the best response by central bankers is to continue running effective monetary policy while being open to fresh ideas and new demands as economies evolve, right? So this is the original link to this, but think about this for a minute. Virtual currencies might just give existing currencies and monetary policy a run for their money. And for example, talking about physical gold again, right? And I think this was very important in the presentation that Mr. Michael made earlier from APSA, right? Many people think about gold in the price of United States dollars, but in many countries, you were better off in gold than in the local currency. For example, the Turkish lira went from 280 to 5, right? Against the dollar. Any Turkish person who had money in gold was better off than having it in the local currency, right? South Africa, I think, is another example. The rand went from 6 to 18 or something, right? If I'm not mistaken, right? A major collapse in the currency. Any South African who had money in gold, right, would have been better off than in the local currency, right? Why is that important? Because almost every person in those countries who had a little bit of money in Bitcoin would have been better off than just in the local currency for some of these reasons. And this is, I think, what the IMF here, the International Monetary Fund, is trying to say. Virtual currencies like Bitcoin might just give existing currencies and monetary policy a run for their money. And this is here the full text, right? And think about the highlighted part in blue, please. With less reliance on intermediaries, consumers are turning more toward new networks and providers, right? Right? So that also means that if the banks don't necessarily catch up on this, they'd actually be losing out. So this is just one slide on potentially how we can get access to these things, right? Okay, this is basically a term sheet from Switzerland, right? Where Bitcoin have a Bitcoin blockchain certificate that last year now became the most traded product on the Swiss stock market, right? Okay, let me ask you this. Why is Switzerland actually very, very pro-Bitcoin? Because Switzerland is often considered a banking country, correct? Right? I mean, Swiss banks are world famous, right? For security, safety, maybe not so much innovation, but at least for safety aspects, right? So some people have argued that Bitcoin is a new Swiss franc. And have you noticed something? I think it's very interesting. I have a lot of Indian friends, right? And they tell me, oh, the Indian government is against Bitcoin. The government says no to Bitcoin. I ask them two questions. Okay, let me ask you, first of all, Does the Indian government trust its own people? Oh, no, no, no. India has capital control. So the average Indian person is not allowed to take money outside the country, right? Or very limited amounts, right? Well, Switzerland has open capital controls. There's no capital controls. The average Swiss person can take all his money and then take it to Kenya shilling and is okay, right? But they're also accepting Bitcoin. So which one do you think has more validity to, you know? So always keep that in mind, for example, right? I understand the government of Morocco is very much against blockchain. But if you go to South Korea, the government of South Korea is very forward-looking. They're very much in favor of blockchain, right? So let me ask you, when was the last time you had a Moroccan mobile phone? Maybe that's part of the answer, right? So think about it for a minute. When countries like Morocco tell you we don't like blockchain and Bitcoin, ask them, when was the last time you created a new Samsung mobile phone? And the answer was never, right? So the reason why I say this is because, as we previously said, a lot of these things are fundamentally emotional and philosophical debates, right? But I think for you who manage other people's money, right, the burden of trust, sir, right? I mean, you have pension money responsibility, correct? When the world is changing, are we changing with the world or do we living in the past? I mean, that's the key question, right? And again, blockchain is one of these areas where potentially we need to be aware of. I mean, don't necessarily take my word for it, make your own study, right? But I think denial is not a strategy, right? Okay, I understand our friend Leo. Where's Leo now? The gentleman from KPMG? Oh, he's there. I think, sir, you studied CFA, correct? And you passed the CFA, right? Yeah, by the way, these are very difficult exams. I mean, I have a lot of respect for people who pass these exams. But if you would like to check the new curriculum of the Chartered Financial Analyst designation, right? What is the newest addition to the study, the body of knowledge? Bitcoin and blockchain assets. I think as of this year. So anybody who is now enrolling into the Chartered Financial Analyst designation will have to study Bitcoin and blockchain. It's part of the exam now, right? That's how the world is changing, and I think it's a positive development. But just quickly share with you, there are always a lot of risks in cryptocurrencies, right? So here, change in regulation, of course, is a big risk, right? Reliance on internet, electricity, and hardware devices, hacking exchanges and Bitcoin wallets, right? And the so-called 51% attack on the nodes in the Bitcoin centralized network, right? Okay, by the way, the risk of regulations, I have to be careful here because number one, I think regulation is important, right? But also don't forget, regulation is often somehow suiting some people, not everyone, right? There were certain regulations in some countries like South Africa before Mr. Mandela became president that served some people, not everyone, right? So just because it's regulation doesn't mean it's the right regulation, right? And since we spoke about gold, I would like you to remember this. The United States, I think in 1933, forbade hoarding of gold and gold bullion and gold certificates within the continental United States. So when the Americans suddenly had a problem with a recession, they tried to confiscate the gold of their own people, right? Later on, they gave it back. But so perceived lack of government regulation and being censorship resistant is actually a good thing, right? Because even the free market, America, for instance, in 1933, basically took its gold away from its own people. And when they gave it back, or they didn't give it back, gold has gone up tremendously in value, right? So keep that in mind when governments want to regulate your own savings, because their interest might not necessarily be your interest, right? Because if your country, by the way, why do we have FATCA? Have you ever realized why we have all these American rules? Because America is also a highly indebted nation, so they need to have global taxation. They need to have all these things in order to basically enforce their own system. So think about this, 31 years later, right? In 1964, prohibitions were like starting, gold certificates were again allowed for private investors on April the 24th, 1964. So again, that's one of the arguments why, for example, well, you cannot regulate Bitcoin. To some people, it's actually a good thing, right? So that is a historical lesson from the United States, right? So how does it link into social media, right? Because some people actually argue we're in the reputation economy. Why is this important to Bitcoin, right? Let me ask you, how much if this hotel room, I mean, simple numbers, why does it cost $100 and why does it cost $100 for everybody? This is where basically social media and this sort of reputation economy comes in. Have you thought about what reputation economy means? It's linked to blockchain and Bitcoin in a certain way. Think about it for a minute. If, for example, this lady, for example, has a rental car in Mombasa, right? And that rental car, she drives around, she goes to the beach, and she brings the rental car back dirty, right? Or damaged, right? She checks into a hotel, and the hotel price is usually $100. In real time, her quote will be $120 because she is a higher risk. So the social media network will pick up all these things immediately and will reprice it dynamically. So that's where the reputation economy is in. For example, if I, for example, lose my job tomorrow and people have it on Facebook, I'm sorry you lost your job and things like this, then the next day my credit card company will call me, will reduce the credit card limit. The reverse works. For example, if I suddenly get a promotion, everybody says, oh, congratulations, you're now managing director at Equity Bank of Kenya. Oh, then suddenly the system will, we will suddenly instantaneously, the credit card company increases your limit. And by the way, you have all these offers about a new holiday on Mombasa, right? So this will be real time. It's a bit like Bitcoin. Bitcoin trades 24 hours, 7, it never stops, right? All these things will be interrelated. And just to conclude, reputation economy, artificial intelligence, robotics, right? For example, if you think about, if I had a robot, should I pay more robot next to electricity? Well, most probably the robot is not going to take paper money, Kenyan shillings, but he might take actually Ethereum or Bitcoin, right? So when the world goes increasingly into robotics and automation, how do these things, the economic system, how do they interlink, right? And this is, again, basically the thing. For example, just to conclude, some people, right? But increasingly, the world is going to be multi-asset. For example, in some countries, air miles is like a currency, right? You can actually trade for air miles, right? So it's the same like this. A lot of these cryptocurrencies have a use case, have a function behind it, right? And they are all increasingly linked to each other, right? So the technical term here, that sounds very funny, but please remember it, it's called atomic swap. Remember we studied interest rate swaps in banking and so forth, right? On the blockchain, it's called an atomic swap. Atomic swap sounds funny, but it's basically when one blockchain asset can settle against another blockchain asset. In real time, you don't even see it. For instance, when you have Bitcoin on the one hand and you got Ethereum on the other, it automatically translates into this in instantaneous, right? And you see, look, when the internet came about, people said it was really useless because, you see, I cannot sit on Mombasa Beach and watch YouTube movies from my mobile phone, right? Very true, yes. The same arguments are now made about Bitcoin. Well, it's not really scalable enough, right? What if the whole world would suddenly buy their coffee on Bitcoin, the whole network was crash, right? And there's some validity to these arguments, but then the scaling usually will come in much more than people think. And this is exactly the thing. We're still early days, right? But if you think about reputation economy and everybody, for example, in many job applications, you don't even actually send a CV to a human person anymore. It goes through algorithms first, right? In some countries, right? And for example, some employers, when they hire you, they do extensive social media checks on you, right? And they also basically try to identify your consumer behavior and personal characteristics from the data they get from a lot of these social things, right? So the reputation economy is increasingly very, very important, and it's increasingly driving a lot of variables. That is also somehow linked into blockchain, right? And the final thought is this. Let me just show you this. Right? And Bitcoin doesn't have any coins in that sense. They're just entries on the Bitcoin blockchain, right? But again, think about it. Airbnb, the world's largest accommodation provider, owns no real estate, right? So that's really the new world we're living in. And if you had invested in any of these companies for your pension fund, you would have done well, presumably, right? The last one that is not on the slide yet is blockchain assets. So with that in mind, I hope that some of the information was interesting, useful, and maybe thought-provoking. And I would like to sort of encourage all of you to sort of take this as an example to start reading up yourself on the subject, right? And try to understand the different views, why some people are very much against Bitcoin blockchain and why some people are really embracing it. But I would argue that anybody who manages other people's money and who has a long-term view through pensions cannot afford to basically start to understand this area and subject. So thank you very much, everybody, for your kind attention. Should we do a bit of Q&A or something? Yes, hello.
From the previous two speakers, Michael and Michael.
Yes.
I can assure you that when I go back to Zambia, to Lusaka, I'll drive to my home village. I'll ask the chief, who is the subject of the Mwatayamvo from the Lundaluba Kingdom in Congo. He'll bring all his subjects and I'll talk to them because I'm one of the most learned sons of their soil. I'll tell them that I was in Mombasa. We learned about the Bitcoin. We learned about the cryptocurrencies. We learned about the ETF. So bring all your money together. They'll bring all their cattle, their goats, and all their harvests. I'll sell them, and I'll bring the money and invest in ETFs, in cryptocurrencies, and in blockchain. Now, that is me. Now, I am a trustee. And on the other side, I'm also one of the fund managers. I hope Mr. Kiri is here, Osaya. Okay. Madam Farida, you're here? Good. As a fund manager or a fund trustee, how do we domesticate this into our pension funds, looking at the constraints that we have in regulation? And I can tell that maybe, is Irene here from
Irene, are you here?
Exchange? She's not here? Okay. All these things that we're talking here, they are not regulated. And for me, I can do that virtually.
Yeah, but sir, good question. Regulated by whom? I mean, that's a good question because regulation, and that's another thing, right? Increasingly, it's a global world, borderless, right? Regulated by whom? That's a good question, right?
The regulation, okay, we are here as pension fund managers, okay? Now the regulation will start from higher, maybe from the central bank, it's not regulated. Then we come to our pension funds or pension authorities, it's not regulated.
Yes.
And it's not even there on the capital, on the asset allocation, it's not even there. So I wanted the gurus like Mr. Kid is not here, but Madam Farida can help us from our UK experience. How do we incorporate this? How do you domesticate this in the African perspective? Maybe,
but
yeah, please.
That's a very good question. And it's really, the word comes to mind is career risk, right? Give an example. And think about it this way. If the United States Post Office, right? Post Office could have regulated email, right? We were still writing physical letters because they would have shut it down because the United States Post Office obviously didn't like the world communicating on email, right? Their business model was being disrupted, right? So the same with the banks. If you would like the banks to really accept Bitcoin, they know that over time they will become obsolete, right? This whole point about Mr. Bill Gates, banking as a function is necessary, banks are not. They will try their best to maintain the status quo, right? By the way, South Africa apartheid regime also tried to maintain the status quo, and they were fully regulated, if you remember, right? Until the system didn't work anymore, right? So that's unfortunately the reality. For example, I was the other day in Kazakhstan. We met with the head of the stock exchange, right? And I don't have an answer to your question, just would like to share with you some thoughts on this. So we speak to the stock exchange of Kazakhstan. Kazakhstan is a large country and oil rich and so forth. And the CEO of the stock exchange is maybe 65 years old, 64 or something, before retirement, doesn't speak English, and he was very negative on Bitcoin. He said, Bitcoin, no, no good, no good. His assistant, on the other hand, right, was maybe 28 years old, fluent English, tech savvy, and he says, you know what? I invest my own money in Bitcoin. That gives you the reality of the matter. The guy who doesn't speak English, who is 64, he drives a Mercedes because the system pays for it, right? Right? He says we don't want it, right? The guy who doesn't have the Mercedes, the guy who speaks English, the guy who's on the internet, and he says, my own money, I have some in it. That's the reality. And this is really the problem if you manage other people's money. For instance, I work in a family office, right? Every bank in the world told you not to buy Bitcoin, right? Officially. Bitcoin is the best performing asset class by far, as you've seen by these numbers. But no bank officially tells you, oh, you should invest in this, right? You see the point? Because if you think about it, right? If they would tell you to invest in this, it would be more difficult for them to sell their other products. So again, to your question, the system is always skewed against the individual investor. And this is really how the world is changing. I'll give it a concrete example. I worked many years at HSBC Private Bank, right? And HSBC had a research report that was called the New World Order. It was published in 2003, right? And it was called the New World Order, right? So basically what it says that every second person in the world is either Chinese or Indian, right? And in a nutshell, the previously rich people in the world are getting poorer, and the previously poor people, like the Chinese, are getting richer. And that changes everything, right? So are you invested in line with that, right? But guess what? The average pension fund allocation to emerging markets in 2003 was 0 to 1%. Okay, from 2000 to 2010, emerging markets and asset class went up 7 times or something, if I'm not mistaken. The US equity market was roughly unchanged, 1 or 2% up. Okay, give an example, your country, Zambia, correct? I think the Central Bank of Zambia owns British pounds, right? But let me ask you, does the Central Bank of Zambia own any Korean won in their reserves? No. Look, I've been in London last week, and I've been to South Korea the 2 weeks before. If I go to London, the London Tube looks like the new third world. If I go to Korea, it looks like the future, right? But again, if I'm the Zambian central bank, should I not have more reserves in a country that is the future than the past? Who knows? But again, if you're a trustee, signing off on having investments in Korea because they have Samsung, Kia Motors, and all the rest is still difficult. So that's the thing that you need to understand. And maybe, Frida, you can share with that often the system is backward-looking, not forward-looking, right? Please.
Yeah. Any more questions for Michael?
Yeah, by the way, before we go, but there's one slide. Sorry, forgive me for this. Have you ever? What does BG and AG stand for? By the way, many people are Christians here, correct? AC and BC. What does it stand for? Before Christ and after Christ, right? So what happens if you change the C into a G? Look at this. Look at this. If you look at these people, right? For example, your trustee investment pension fund goes, these are the people. Would you invest in them? A little kid here, a little kid here, unshaven, right? Would you have given money to these people? Microsoft Corporation, 1978, Bitcoin today, same story. But if I bring these people to my pension fund committee meeting, they won't necessarily get any allocation to investments. They don't even wear a suit and a tie, right? So Microsoft Corporation, 1978. With that in mind, if there's no other question, or was there a question? Yeah.
Sorry, it's actually not a question, it's an answer to,
Yeah,
to my
please.
colleague. Yeah, he was actually saying that Bitcoin and the new gold ETF are not regulated. Well, let me talk about new gold. So new gold is structured as a company. It's listed on the exchange, and therefore it has to comply with the listing requirement of the exchange where it's listed. In terms of the pension fund regulation, so on asset class allocation, you'll have your equity, fixed income. You get prudential limit that says you can either classify some of the asset as commodities or as equities. So in many countries, they classify new gold as equities. In other countries, they use what you call a look-through principle to say, what is the underlying asset of that security? It's gold, and therefore it must be classified as commodities. So for pension fund purposes, it's either classified as commodity or as equities, depending from which country is actually listed on. So it is actually regulated.
Yeah, thank you, Mr. Michael. Bernard Nyauro from Aseno University Retirement Benefit Scheme, the only university on the equator. Now, allow me to use this word.
Please.
You know, there's an animal called a zebra. Now, could you dare touch or get hold of a zebra's tail? I mean, you know what you expect, double kick. There's been this name called Bitcoin has been familiar in this country,
Yes.
in Kenya. And so many people have lost a huge amount of money in the scheme, Bitcoin investment. I don't know whether they are the same, they may be different. So maybe share with us, what is the uptake of Bitcoin investment in Kenya or East Africa?
Yeah, look, I think that's a very good question. And again, two things. One has to be very careful. Whenever something is really new, right, there will always be, unfortunately, some of the wrong characters involved in some of these things. That's why it's very important to have regulation and also ultimately buyer beware. I mean, everybody has to make their own decisions, right? But I suppose this is the key slide to answer your question. It was this one. 1 second, please. This one. To your question about the scams and things like that, people say buy or sell, right? Or consulting for it. But have you seen here, understanding it truly, nobody's there? And I think everybody should spend time on this. So instead of buying Bitcoin, you should invest in understanding it. I think that's the best education because it's fundamentally changing the economic system, right? So that maybe is the answer to your question, because everybody is just buy and sell, or when should I buy, when should I sell? That's often the wrong question, right? And again, more importantly, when people tell you, and people get lured into these things, and that's why the regulator has a point, when something goes from 700 a year ago to 19,000, of course it gets attention, right? December 2016, right? Bitcoin was at $730. It ended the year at $19,000, right? I haven't seen anything like this in my lifetime, right? From 700 to 19 in 1 year. Of course it gets the wrong attention, but more importantly, you need to understand how is it possible that you get to these levels, right? So again, what we try to do today, use it as a starting point. Learn as much as you can about it, because it's a bit like the internet, right? And again, look, this is a difference. Again, I spoke about Korea, right? Korea as a country truly embraced the internet. Japan did not. Korea went like this, Japan was stagnating, right? So the choice is ours. Are we embracing it, or are we basically in denial and try to say it will go away? So hence, I think understanding blockchain and Bitcoin, this is where we need to be. And this is unfortunately where the least people are, right? Yeah. There. Yeah.
We are here discussing pension funds.
Yes.
And it looks like from what you have opened up our minds. Mind is now more open up coins. I didn't know very much about it. but it looks to be the future. As the pension funds of the world, like Australia, you said will be adopting the cryptocurrency. Are there some pension funds which are now being invested in these cryptocurrencies? If you know of any, those could be case studies for us, because we are also regulated here in Kenya by Retirement Benefits Authority.
Yes.
So unless they place the cryptocurrency within the portfolios, we may find will and we can in the cryptocurrency. So do you know of any other place or any other country where the pension funds are being invested in cryptocurrency?
My understanding is not yet, but I think, look, this is a big debate, and we'll talk about this in the next presentation. I think another presentation in the afternoon, right? That, and this is again where Mr. Trump comes in, right? The United States is the largest debtor nation on the planet, right? Too much debt, right? And who owns this debt? The Chinese, right? And now Mr. Trump says, look, we have to change everything, right? So ultimately, debt or bonds in dollars might not be safe. This idea that's a risk-free rate, right? A lot of these things are changing, right? So, and hence, as a pension fund manager, because it is a big burden of trust, you're rooted in the past by definition, right? That's why often you're not prepared for the future. But for example, so as we might discuss later on, many pension funds are their assets are here. There's a big gap, right? And the system of traditional asset markets are already very stretched. A couple of slides later in the afternoon, you might have pension funds that potentially could go bankrupt or actually might be insolvent, right? And these are very deep systemic questions, right? For example, many people consider the United States dollar to be safe money. Is it? Well, that's the question. The Chinese increasingly don't think the dollar is safe, especially when that country is putting a lot of pressure on you and trying to renegotiate trade deals and things like that, right? So is it suddenly safe? Who knows, right? But this is how the world is changing, and you need to understand this is the setup of the system. For example, the best analogy is this. When the leadership changed from Britain to the United States, right? Many pension funds, many governments, and many central banks had money in British pounds. They considered British pound to be the world's reserve currency, right? Britain was declining, America went up like this, but many people had, the committee did not agree to put dollars in. Declining, America went up like this, but many people had, the committee did not agree to put dollars in because they were rooted in the British system, so to speak, right? Britain has gone nowhere to down, and America really took off. Same thing, right? So that's why it's so, whether it's politics, technology, relations between countries. So that's why it's so, whether it's politics, technology, relations between us in flux. And this is why I think also to your point, sir, the local legislation is not ready for this. Also because how do you define these things, right? It's a bit like saying, well, Bitcoin is like currency. It's a bit like saying the internet is like email. That is true, but it's much more than that, right? And that's exactly the difficulty. So again, going forward, I mean, why did I mention this example about the CFA, right? Chartered Financial Analyst designation, right? They're now putting this into the curriculum, but it takes time for the system to understand this and then officially put a stamp on this, we can do this, right? But that's actually why many people lose out. It's not Switzerland, but as a pension fund, you should have had some money in these areas of the world because they have done so much better than the Western countries, right? But I remember even European pension funds were not allowed to invest in emerging markets. They had to buy British government bonds. Right? So
Thank
there's
you
no
so
answer to that, but thank you.
Sorry. Thank you so much, Michael. I think I had a few questions for you, but you've answered them already. I had the future of Bitcoin, which you answered. I put down the blockchain being very hard to be accepted in the market. My comment on that is that it's very hard to accept something very new, something very unique, always naturally. But as you've shown there, that as time goes on, people get used to it, and then eventually they accept it. So thank you. Can we give a loud applause to Michael, please? Michael, thank you so much. Thank you very much. Thank you. With that very detailed and something very new to us, which is very brilliant, Michael, thank you. With this, we had a very brilliant session with the the presenters, the two Mike and Levi. Not everything we perfectly plan goes well. And I'd like to sincerely apologize for Levi's slides that could not come up down properly. Levi, that should not put you down at all. We have a lot of confidence for you, and I'll tell you that the next person on the conference list is you. So we've got a lot of respect for KPMG. Thank you so much. Now we're gonna have a break. We've got a lot of respect for KPMG. Thank you so much. Now, we're going to have a break for lunch. We've gone late. And when we come back, I think we're going to be an hour, so we'll be here roughly 20 minutes past 14. So thank you very much for this morning session. Thank you so much. 20 minutes past 14. So thank you very much for this morning session. Thank you so much.
Mshikaji Zuma, nilikutumia ujumbe, umeuona? Very good. Basi kumbe unasomaga jumbe wewe. Haya bwana, haya nimeelewa bwana, asante sana. Yes, fairly nice. I didn't want to eat today, so I took sick and some very light. I didn't feel like eating. The breakfast was still circulating. Yes.
Welcome back from that heavy African lunch. Hope everybody enjoyed it like I did. So today, this afternoon, we're going to start yet again, with the lovely lady from Uganda. By the way, I'm originally from Uganda myself, those of you who don't know. And I've worked with Linda's company for some time, which is UBRA. And I've helped in the liberalization of the pension system in Uganda on the advisory side, on the Board of Governors. To introduce Daisy, Daisy is the licensing manager at UBRA, which is Uganda Retirement Benefits Regulatory Authority. Miss Daisy joined the authority in 2015. She's an advocate of the High Court of Uganda and all courts of judicature. She holds a Bachelor of Law degree from Makerere University, a postgraduate diploma in legal practice from Law Development Center, which is LDC, and a master's in business administration, MBA, from the Eastern and Southern Africa Management Institute. Daisy has over 10 years experience in commercial law and banking, having worked in both the public and the private sectors before joining UBRA. She's worked with DFCU Bank in the Credit Operations Unit in charge of credit documentation and securities perfection. She's a member of the Uganda Law Society and East African Law Society. Please welcome Daisy. Thank you very much.
Good afternoon, ladies. It is indeed my pleasure to be here, and I want to thank the team from ABC and the whole organizing team for giving us the opportunity to be present in this summit. I must admit that from the morning presentations, I think there's been more learning for me, which is quite interesting. So let's dig into our presentation as we start. We'll definitely talk about briefly the background to the changing roles of trustees and pension committees. Historically, what has that been? And what is the trend looking like now and for the future? For the future where there's Bitcoin, what does that mean for pension trustees? For the future where there is new gold, what does that mean for pension trustees? We need to get out of the box here. But before I get into the business, I need to talk about the person who pays my bills, who puts food on the table. So what is UBRA? I've had a discussion with a number of people. We have people from Kenya. Is anyone from Tanzania? Of course, you have from South Africa. But UBRA is a pension regulator for Uganda, the equivalent of RBA. From Tanzania, it would be SSRA. From South Africa, I think it would be Financial Services Commission. So UBRA is a regulator, but for pensions in particular. We regulate and supervise the pension sector, but most importantly, the biggest mandate we have is to protect the interest of members. We have a vast number of roles under our mandate, but like I highlighted, supervising and regulating. I am the manager licensing, so one of our roles is to license sector players. So if you're here and you want to extend into the Uganda market, you would have to talk to me for now. Highlights from what we have done under that mandate, of course, licensing. We have a streamlined sector currently. In the past, it was anything goes, but now we have a sector that has a bit of streamlining. We've had a number of regulations, supervision. Most importantly, what we are focusing on last year and this year, inclusion of the informal sector and investment of pension fund pension funds. So when I came this morning and the discussion was about the new developments in the area of investment, I was actually very excited because we're looking at having diversification in investment arena. So to the business of our presentation, the role of the dynamic role of trustees. We have to be cognizant. I think for some people, I've had a discussion with some people from Telposta. I don't know if your scheme is the way it was in the past. 10 years ago, was it the same scheme? Most likely not. The arena has changed, the landscape for schemes has changed. In the past, maybe 10 years or so back, the highest number of schemes were defined benefit schemes. Now we're moving into an international change to defined contribution schemes. What does that mean for trustees? Of course, things have to change. I'll take an example of UBRA. UBRA is no more than 6 years old. Establishment was as at 2011, but actual operation started in 2013. So UBRA itself is a young institution. But the point I'm making is, even for areas that are not regulated, there's a dynamic move towards having regulation. So that alone has changed the market. We also have a dynamic membership. The gentleman from KPMG Levy talked about the need to understand our members. Back then, you had members who were the retiring age because of the defined benefit scheme. Now you have a defined contribution scheme that has members as young as 22 who are joining the work market. So you need to understand what works for this 22-year-old, what works for the 30-year-old, and what works for the 60-year-old who is actually retiring. Then when it comes into the capital markets, that is even more complicated. You'll have somebody talk about new gold, then Bitcoin comes in. Of course, as a trustee, you have to ask yourself, where do I fit in here for the benefit of my members? So you see, originally, you were looking at books of accounts. Now you have to look at which is a new investment opportunity in the market. How do I approach it? If it's new gold, what are the challenges there? How do I manage them for my membership? Yeah? So it's important as trustees to understand that my role as a trustee in 2014 has greatly changed for me as a trustee in 2018, and it is bound to change. And the leaps of that are big, that if you are not moving at that same pace, you become obsolete in the market. Historically, when you look at the roles of these trustees, especially defined benefit schemes, it was a promise. The governments were not funding these schemes. So it was a matter of knowing who are my members. I have a list of those. How long have they worked? What's the final salary? Calculate it over, and I know how much pension I'm going to be paying this person. So every month you put in a request to government. Please pay Daisy on this frequency and at this amount. But now you have a change of defined contribution schemes, and the dynamics in that scheme is extreme. So in the past, it was a matter of just records. Who are you paying? You manage that bit of payment. Yeah? And of course, being that it is a trust, you have to defend that trust. You look at the instrument that establishes that trust, and you follow the rules in there. Of course, treating beneficiaries impartially. There was no delegation whatsoever. As a trustee or pension committee of that scheme, I determined how much is getting out, because I wasn't putting any money in, yeah? But things are now changing. You have an institution, a pension fund now. By the virtue of that institution being there, it has already brought in changes, yeah? To manage that pension scheme, what are the controls you have in place? So if you're an old trustee of 1978, managing a scheme today means that you also have to change structure that is in place. So right now, the roles of the trustees that have actually changed. We look at a scheme and there's a requirement to have a sound framework for managing that scheme. What internal controls do you have? Levy was talking about risk management. In the past, no one cared about risk management, but now you actually have to think through it. For Uganda and I think Kenya, because our laws are just about the same, you find that the law itself requires you to have basic internal controls, like a risk management policy, internal control policies. You have outsourcing, you know. In the past, that wasn't there, but now you have to think through it. And I think that's why most of our laws now, we're advocating for a board of trustees that is composed of adverse professionals. Because in the past, maybe you wanted an actuary and that was all that you needed for a scheme. But now there are legal issues. You must have a lawyer. There are financial issues. You must have somebody there to deal with those finances and to also understand how the system works. In addition to just the fund being there, the structure of the fund being there, we now come with new entrants into that scheme. Employer contribution, employee contribution. How do you treat those? It's not just a matter of receiving funds and at the end of the month paying out. Yeah? So as a trustee, you're responsible for those contributions. If the sponsor says that they're contributing 10%, has that 10% actually come? Or do I wake up in the morning and say it's 10%, but this month, Kenya Ports Authority, for example, has not performed well, so we'll only give you 5%. What does that mean to you as the trustee? Then you look at the investment. That's a whole other arena. You have a scheme where, of course, currently we have regulations that specify asset classes, but even in those asset classes, because it's a responsibility of the trustee to make sure that you have the right allocation for your scheme. As much as you're not investing because you have a fund manager, you still set up the structure for that fund manager to perform. How will you assess that fund manager if you don't understand the investment landscape? Like Levi said, last year, equities performed so well. The year before that, equities did not bring in any return. So you know what was happening at AGMs with the schemes? You go and present to them and tell them this year equities, we're giving you 13%, for example, because equities didn't perform well. Members are in uproar. They're asking, what are these trustees doing for us? You have to make them understand that it is market dynamics. In the past, that was not there. But now you have to manage those expectations. Then managing that scheme, we have, of course, we've talked about investment, but then the biggest other part, the outsourcing. Because remember now the laws require that you outsource to service providers. You have a fund manager, you have an administrator, you have a custodian. If you don't understand how their business works, supervise them. So now the trustee requires to have that in-depth information and knowledge and make sure that I can actually talk to Michael from New Gold and discuss at the same wavelength. If he comes and presents to me and he's saying, oh, this is working so well, you need to invest in New Gold, you need to invest this. As a trustee, you should be able to question him. You should be able to ask Michael, this thing about Bitcoin, tell me about it. So he explains to you. When he explains to you, it shouldn't be all full gospel to you. You should be able to dig deep into the operation of that investment. When it comes to custodians, these are people who already have their systems. In Uganda, our custodians are financial institutions. If you don't understand how the financial institution works, how will you explain to members where their money is kept? Yeah? So as a trustee now, it has become, one of the presenters in the morning said it's no longer a trust, it's a burden of trust actually this time. Because I, a member, trusts you, the trustee, to make sure that my funds are safe. But the way you keep my funds safe and growing requires a lot of input from the trustee. When you have defined benefit schemes, for those who have defined benefit schemes, then you have to deal with the actuary, who will also come with the numbers. How many lawyers are here, other than myself? How good are you with your mathematics? So when you find a scheme that has Daisy and the lady as trustees, and you can barely calculate the ratios, an actuary will come and tell you there's this ratio. Now the demographics have changed. Now we have to look into mortality tables, When they give you a mortality table and you're looking at it, you're wondering, what am I using this information? Surprisingly, lawyers are very good mathematicians because they change the numbers to words. That number be able to, you must be able to explain that number. That's where a lawyer is very good with mathematics. But when you're looking at those numbers, it is scary. Truthfully, for me, if you gave me a table, there was a chart, I think it was from the morning, that had a chart with the percentages. Once I see a chart with percentages, there's a likelihood I will switch off because I know that is not my arena to play in. But now as a trustee, I am forced to have a see at that chart and I must make sense of it. Yeah? Because the member who is investing their funds in this scheme does not want to know about my being a lawyer. All they want to see is their 10% going into the scheme and coming out as 100%. They don't want any negatives. So if to this play in the negative, most likely if it's has a combination of people. You can't have a board that just has lawyers. You can't have a board that just has actuaries. So that change alone changes the role of the trustee. Then it comes to performance. In Uganda, one of the issues that we've had with a number of our schemes is then it comes to performance. In Uganda, one of the issues that we've had with a number of our schemes is the cost of administering the schemes. Recently, there was a scheme we're dealing with, and we're talking about their exorbitant costs. And we looked at the numbers. One of the service providers was being paid a huge sum of money. This is a tax consultant. So we had a meeting with these trustees and asked, what is this tax consultant doing for the scheme? When you look at their portfolio, they had a big chunk of the funds invested in government securities. The tax on government securities is obvious. By the time you're investing there, you already know the tax you're going to pay. Then you look at them having an auditor. The fund has not grown much. There's not been any change. It is the same structure of the fund, but the auditor is paid in 1 year, 12 million shillings. In the next year, 30 million shillings. And you're asking, where is that change? And you know what the trustee said? We were presented with that. Where is that change? And you know what the trustee said? We were presented with that auditor, so we used that auditor. Who presented this auditor to them? The administrator of the scheme. So as a trustee, you need to be able to have some sort of assessment, because the cost of that scheme, it may not impair the scheme today, but it impairs the value of the benefits I, as an individual, takes home. The fund today, because you're looking at a fund of 9 billion shillings, for example, the 20 that fund very much going home as an individual. Funds that I take home as my benefits will be greatly affected. So as a trustee, you also look at the costs of that scheme. But that doesn't mean that you look at the cost, reduce the cost, and impair the quality of service. So you have to manage that balance. And that's where the role of trustees has greatly changed. You look at data. There are many of our schemes. In Uganda, because the sector has just started being regulated, we have a number of schemes where they're just reconstructing their data because some of the data was kept in the parent company in Nairobi. You know, we have banks where some of that data was kept with the parent company, for example, in South Africa, wherever. So now the scheme, because it has to work in Uganda, has to reconstruct that data. Even if you outsource to this administrator, ultimately the trustee is responsible for the quality of that data. Then when you go to legal risks, in the past, you were a trustee, yes, trusted friend managing the scheme, and that was it. But now we have gone into the depth of putting liability on you, the trustee. Individually, you're responsible for the decisions you make, and collectively. So you have to be mindful. If we are sitting at a board meeting and one person is advocating for one thing and the other another, you need to find a balance. Because ultimately, when there is a liability coming up against the trustees, it can be either individual or collective. That was, we're talking about the inputs in that scheme. Now, there are things that affect the scheme going out. We've talked about costs, but there's the biggest elephant. Now, there are things that affect the scheme going out. We've talked about costs, but there's the biggest elephant. Those are the benefits. You know, most members, how many of us, I'll ask the Ugandan people, how many of us know how much is in your NSSF account? You know your balance as today? Wow, that's very nice. I should be, I should be meeting such a crowd because many times when you go into schemes, those members, they know money is going to NSSF. They know money is going to their occupational scheme. But if you ask them about their balance, they don't know. But at the point when I am exiting, then I take interest and look at the schedule. Before you know it, I come to the trustee and I'm asking, how come this month the employer only put 20,000 shillings, yet I'd been putting 30, you know? So it's important for the trustees to be able to understand that scheme. What are the rules of that scheme? Maybe someone's benefits, contributions were reduced by a reduction in the contribution. If someone, let's say, there are some schemes that provide that once you're out of office on secondment, the salary goes down, it means the contributions also go down. But as a member, I might not take in notice of that then. But when I'm exiting, then I come to you and I'm asking, why am I getting this amount instead of this amount? Then you have a situation of the regulation itself. The regulator requires quarterly returns or monthly returns. The regulator requires an assessment of your fitness and propriety. That wasn't there. So now it has to come into play. One of the issues that Michael talked about earlier was the issue of reputation. It's the most valuable asset. In the past, it wasn't such an issue. But now the regulator goes ahead to assess your fitness and propriety based on your reputation. If you don't have a good one. One of the requirements in the UBRA Act, but now the regulator goes ahead to assess your fitness and propriety based on your reputation. If you don't have a good one. One of the requirements in the UBRA Act is that that person must not have been convicted of a crime. That's one. Two, a crime related to mismanagement of a scheme. So imagine you are adjudged as a non-fit trustee. You know what that does to your reputation. Before you know it, if it's in developed countries, they look at how much the credit they can give you because of the kind of reputation you have. And that all goes with the change in the environment that now requires regulation. So now, because of the regulatory environment, the trustee has to change their ways also. Then you come to the members. Their members these days, there's internet. Many times when people ask me a question and I just need a quick answer, the first place to go to is Google. It's a medical issue, Google will sort you out. It's a financial issue, Google will sort you out. So you have a membership that has people who are reliant on the internet. So when you're telling them that we are investing in the Bitcoin, they need to understand. They need to understand what that means to them. If you're not informed as a trustee, you think members will actually believe you when you're telling them, well, I have to invest in Bitcoin. They must be able to first understand it. But the most important thing when it comes to members and their interest is that ratio, the replacement ratio. It may not mean much now to a member, but later when they're asking, why am I getting a pension or a retirement benefit of, in Uganda, we still have provident funds. So you find a provident fund paying 30 million shillings, for example, as you exit. And this person says, but I've worked with Ubra for the past 15 years. How can I only take 30 million shillings? So you have to explain to them issues like the costs that went in there. But if as a trustee you didn't manage those costs, it means whatever you're replacing is not sufficient. But also it goes into the investment. If you are planning for the investment of that scheme, the kind of investments that you make for the funds you have depend on a number of things. Yeah? There's a training I attended one time, and there's something a gentleman said, which is the same thing like Levy was asking today. Do we know the membership of our schemes? Or we just know that I work with Ubra, there's a scheme, I am a trustee. You need to understand, are there more 20-year-olds or 50-year-olds? Are there more female members, male members? Because the kind of risk that these people take is very diverse, and you have to be cognizant of that. So that as you invest, you're looking at the long-term gain for each of the members. When it comes to communication, people these days access all kinds of information on the phone, internet, of course. So members are well informed. So as a trustee, you need to be able to communicate properly. There's a scheme that has mainly, it's actually a closed scheme that has pensioners. If you're from Uganda, even Kenya, I think you might have the same scenario, where the members, after retiring, go back to their village homes. Sometimes that village home does not even have internet access. But this scheme insisted on sending emails and WhatsApps. Go back to their village homes. Sometimes that village home does not even have internet access. But this scheme insisted on sending emails and WhatsApps. And the members came one time for a meeting and asked, come, we don't know all these things. And the administrator was busy telling them I sent an email. So one of the old gentlemen, he was about 75, he gets up and he says, in my village in Kaberamaido, have you ever heard of internet in that place for you to be communicating with me on email? So we, as a trustee, then it becomes a challenge. How do I communicate with my members? Because once he goes back to his village, he will not receive your communication. Then you have the 20-year-olds, like they said, you can't call